Anyway, that's what we have coming up, Andrew.
We will be seeing you guys a lot in just a couple of minutes. We've got the former Sun Microsystems CEO, Scott McNeil. He never wanted to hold back. We're looking forward to that interview as well. We'll see you in just a couple minutes.
And coming up, the clash of the titans. Activist investor Elliott Management, as Joe was just mentioning, taking a stake in software.
Taking over for the Wilpons for 5 years. Now it won't happen at all. The Mets say they are looking for another potential buyer. Busy day for the Knicks. They won a game. They traded their leading scorer. They also reportedly have a deal for a new team president, Leon Rose, who's been a player agent, represents the likes of Karl Anthony Towns, Joel Embiid, and Devin Booker. Perhaps he can steer them to New York. The trade was Marcus Morris to the Clippers for former St. John star Mo Harkless, LA's first-round draft pick this year and second-rounder next year. Knicks coach Mike Miller on Morris.
I've been singing his praises all along from the very beginning, and he helped us in such ways. I mean, not only the shot making and the things he did on the floor, but what he did in the locker room and what he did on the practice court, and he made an impact on our team.
Without Morris, Knicks still beat Orlando at the Garden 105-103, so they've won 3 in a row. Julius Randle 22 points, Taj Gibson with 19, Elfrid Payton 15 points, 9 assists, 7 steals. Hockey in Brooklyn, where the Islanders have not lost a game in regulation all season. They scored the last 4 goals of the game, 3 in the third period. They beat Los Angeles 5-3. Devils an impressive win, 5-0 at Philadelphia. LIU, Wagner, and St. Francis all lost in local college basketball. With the Bloomberg NBC Sports Update, I'm John Stashower. Nathan?
All right, thanks, John. It's 6:37 on Wall Street.
The following commentary is from Bloomberg Opinion.
Boeing deserves blame for many things, but dragging U.S. economic growth below 3% isn't one of them. I'm Brooke Sutherland, a columnist for Bloomberg Opinion. U.S. Treasury Secretary Steven Mnuchin said Thursday that Boeing is a big reason the U.S. won't see the 3% expansion in GDP that the Trump administration had been predicting for 2020. Boeing is the largest U.S. exporter, and a production halt for its grounded 737 MAX that took effect in January will undoubtedly be a drag on growth. But to believe Mnuchin's statement, you have to also believe that there was ever really a shot of 3% growth this year. Most economists would disagree. The median forecast of economists surveyed by Bloomberg is for 1.8% U.S. GDP growth this year. That number hasn't been above 2% since May 2018, almost 6 months before the Boeing MAX jet crashed off the coast of Indonesia. Plenty of industrial companies that have almost nothing to do with Boeing have been downbeat about their growth prospects in the coming year. So it feels like Boeing is a convenient scapegoat for an administration that doesn't care to admit its trade war with China dragged the manufacturing sector into a mild recession last year, and that expectations for a swift recovery off of the eventual ceasefire signed in January were overblown. I'm Brooke Sutherland. For more opinion, visit Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
You can hear Bloomberg Opinion commentaries every weekday at this time, and terminal customers can read more at OPIN Go. Just before 6:39 on Wall Street, time for the Bloomberg Green Report. Here's Bob Moon.
When you think of Old MacDonald, you probably aren't thinking of a farm like this. Factory livestock farms are spreading across rural America, raising concerns about environmental damage and health risks for people living nearby. An industry once based on small, independent farms is evolving into large operations, housing thousands of animals under one roof. The benefit, the change, is helping make beef, poultry, and pork more affordable. The drawback? Animal waste from the mega farms has fouled waters. The enclosures spew air pollutants that promote climate change and are implicated in illnesses such as asthma. The stench of manure can make life miserable for people nearby. The spread of these corporate animal farms is turning neighbor against neighbor in town halls and courtrooms across rural America. Iowa is a major battleground as the top U.S. producer of swine and egg-laying chickens. That's the Bloomberg Green Business Report. I'm Bob Moon.
All right, thank you, Bob. Some other stories we're following this morning. Shares of Myriad Genetic have lost more than a quarter of their value this morning. The DNA testing company says its CEO, Mark Capone, is resigning after a steep drop in sales. Shares of Burberry are down more than 1%. The British fashion house is scrapping its financial guidance for the year. It says the coronavirus wiped out at least 3/4 of its sales in China. And Wynn Resorts is losing about $2.5 million a day thanks to the casino shutdown in Macau. China ordered that 15-day closure to prevent a spread of the virus. Wynn gets as much as 3/4 of its revenue from that Chinese gaming hub. S&P futures are down 12 points. Dow futures down 125, and NASDAQ futures a loss of 39 points. On this Jobs Friday, this is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Winter joggers of London, it's chilly. Your legs are caked in mud and your nose is running faster than you. Then, get that heating on. You deserve it. Thanks to Hive Active Heating, you can control your heating wherever you are with a tap of the app, which could save you up to £120 a year by never having to heat an empty home. Buy today and get a free Amazon Echo Dot. Search Hive Heating. Hive services require broadband and Wi-Fi. Terms apply.
Peoples of London. Cooking for family and friends is a real hassle, Sergey tells me. So I, Alexander, occasionally take care of marvelous dinner for whole family. Which means we all go out for meerkat meals. Exactly. How did you guess? Get 2 for 1 on food for up to 6 people at your local favorites, like Grill Shack with meerkat meals, when you buy through Compare the Market. Qualifying purchase, app only, 2 for 1 on selected food, participating restaurants, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
Good morning, this is your Southern service to London Victoria. Join in our onboard quiz. Here's our next clue. What C sounds like a handheld party food but keeps you dry and protected from the rain? Not canapes, canopies.
At Southern Railway, we're investing over £7 million into making improvements for you, like canopies, cycle parking and new platform lighting across more of our stations. Find out more and book your tickets at southernrailway.com. Southern Railway, we're with you.
5 is in! What a run! Touchdown, Kansas City!
Congratulations to the Kansas City Chiefs on winning their first Super Bowl in 50 years and second in franchise history.
50, Watkins, 10, chase to the 5, into the end zone, touchdown! That may be all she wrote!
While the NFL's 100th season may be over, football never stops on TuneIn. Search NFL Podcast to stay current with all the off-season wheeling and dealing.
And get ready for the 2020 NFL Draft in April.
Decision makers to a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
There have been fewer new coronavirus infections reported in China in the last 2 days, and while that's good news, the World Health Organization is warning, quote, the numbers could go up again. The death toll in China now 636. The Democratic presidential candidates have moved past Iowa and are in New Hampshire for a debate tonight ahead of Tuesday's primary. But there is still some confusion over the vote count from the Iowa caucuses, with Democratic National Chairman Tom Perez calling for a recanvass.
We're now at 100%, and I care about making sure that if there are any problems, that people feel like they have an avenue to be heard.
The governor of Virginia declared a state of emergency overnight as heavy rains and extreme flooding continue to occur in the southeast. Virginia, Florida, the Carolinas, and Georgia all experiencing power outages because of the winds downing trees. World stock markets are mostly down in Friday trading, with U.S. stock futures showing declines overnight as well. I'm Michael Toscano.
Why all the top-tier experts? Because business is not a magic trick.
Give us a sense of the economic backdrop.
Bloomberg Markets.
Which financial records are these?
Weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. It is 6:47 on Wall Street. Futures are lower this morning. Let's go to the First Word breaking news desk for today's morning call. And here's Bailey Lipschultz. Bailey, good morning.
Good morning, Karen. As you said, futures are slipping ahead of the U.S. jobs data. The Dow's down 140 points. S&P lower by 14, with the NASDAQ off 43 points. U.S. 10-year yield is at 1.61%. Shanghai rose 0.3% overnight. And European markets are moving lower, led by losses in the U.K. and Germany. Back in the U.S. on the economic front, at 8:30, those U.S. jobs report, and at 10 o'clock, wholesale inventories. Credit Suisse ousted its CEO after a spying scandal. Shares fell as much as 5% in Swiss trading. Uber is up 6% after saying it plans to report a profit later this year, while Skechers' fourth quarter sales topped estimates, and Myriad Genetics is down more than 27% after its CEO resigned as sales fell short. In deal news, Fidelity National to acquire FGL Holdings for $2.7 billion, and eBay is down 7% after ICE said it stopped trying to make a deal for the company. Wrapping things up, Twitter raised to positive at Susquehanna but cut to neutral at Guggenheim. Ford was downgraded at both DZ Bank and Credit Suisse, and GE was raised to hold over at Gordon Haskett. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Karen?
Bailey, thank you. And to hear live breaking news over your Bloomberg, type squawk on your terminal, SQUAWK. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, Pete Buttigieg is catching Bernie Sanders in New Hampshire ahead of tonight's Democratic debate. According to a Boston Globe, WBZ-TV, Suffolk University poll, Sanders has 24%, while Buttigieg is a close second with 23%. Elizabeth Warren is third at 13%, while Joe Biden is fourth with 11%. You can hear tonight's debate on Bloomberg starting at 8 p.m. Wall Street time, followed by a special edition of Bloomberg Sound On with Kevin Cirilli. Japan has reported 41 new cases of a virus on a quarantine cruise ship and turned away another luxury liner out of coronavirus fears. The death toll in mainland China rose to 636. In sports, the owners of the Mets say they are not selling the team to billionaire Steve Cohen after they could not reach a deal, but say the MLB franchise is still up for sale. In the NBA, the Knicks beat the Magic. In the NHL, the Devils and Islanders are winners. Finally, from daybreak on the Bloomberg, the Oscars will be handed out Sunday in what's set to be an unpredictable ceremony. Netflix has a strong shot with Martin Scorsese's The Irishman, up for 10 awards, including Best Picture. 1917 may edge it, or Nathan Parasite may become the first foreign language film to win.
Well, that'd be something. And I know you try to stay impartial, Michael Barr, but I already know which movie you're gunning for Best Picture.
Ford versus Ferrari,
yeah.
Baby.
Yeah, I knew it. I knew it. I'm still bummed out that Avengers Endgame didn't get nominated. That's where I'm at.
Oh, that's too bad.
Oh, well.
Okay. Global news 24 hours a day on air. Here's some popcorn. And on Quick Take by Bloomberg.
You need it.
Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
Put 3 hours of my life into that movie. Thank you, Michael. We are live from the Bloomberg Interactive Brokers Studios. We're at 6:50 on Wall Street. Time to check what's going on in D.C., where some of the top stories include the House voting on a multi-billion-dollar earthquake relief bill for Puerto Rico that President Trump has threatened to veto. The White House weighing a plan to oust Alexander Vindman, the National Security Council official who testified at the House impeachment inquiry, and Pete Buttigieg holding a narrow lead over Bernie Sanders in an Iowa caucus that the Associated Press says is still too close to call. Setting up the next contest for the Democrats, Tuesday's first in the nation primary in New Hampshire. Let's bring in Bloomberg U.S. politics editor Kathleen Hunter as we await tonight's debate in Manchester ahead of the actual voting on Tuesday. And even with the Iowa results not fully resolved, you got to think that this battle shaping up between young and old, centrist versus progressive, is going to be on full display tonight.
Absolutely, and I think the attention is now really moving forward to New Hampshire. Bernie Sanders even made a comment to that effect yesterday, that they're essentially moving forward and looking ahead to the next state. And then, coming up quickly after New Hampshire will be Nevada and then South Carolina as we head into Super Tuesday. So I think the race moves on, even though Iowa hasn't really finished their results yet. And it's almost in some ways like Iowa kind of missed its moment to really have a significant impact, or as significant an impact as it might have had on this race.
Who needs to make an impact in New Hampshire?
Well, I think Elizabeth Warren, for sure. She's from neighboring Massachusetts. So I think that, if she were to have not a particularly strong finish, that would not bode well for her campaign. She's been widely expected to do well there. And of course, Joe Biden, he, by all accounts, by the looks of it, I guess, is finishing rather dismally in Iowa in fourth place, potentially. And I think it's important for him to do well in New Hampshire as well.
If he does not do well in New Hampshire, is that potentially the end of his campaign, or can he still count on getting support in places like South Carolina?
Well, I think his campaign has always really been looking at South Carolina as a potentially strong moment. It is interesting to note that they've rejiggled some of their advertising to go more strongly in Nevada, which is ahead of South Carolina. And so I think that that's a reflection of, potentially a reflection of the idea that the campaign realizes that they can't necessarily wait until South Carolina to have a strong showing. So I think, certainly, I don't know that it'll be the death knell of the Biden campaign if he doesn't do well in New Hampshire, but it certainly won't be good. And if he doesn't do well in New Hampshire or Nevada, that certainly puts a lot of pressure on South Carolina.
For as much talk as Pete Buttigieg has been generating with his strong showing in Iowa, we are continuing to see very strong signs from the Bernie Sanders campaign, not just in terms of their organization, but in terms of fundraising. I mean, how does the landscape look now?
Well, I think that is really an important point with Bernie Sanders. Is the fundraising haul that he had in January was quite significant and has been significant all along. And I think that positions him well in states like California, which are, huge prizes on Super Tuesday, the biggest prize really on Super Tuesday. And I think it's seen in, his ability to have a strong ground game already set up in California, much stronger than any of the other candidates. And that, could really speak to his potential staying power in the race. Some of these other, as the result starts coming in these states, some of these other candidates might have difficulty with fundraising. Sanders, we're not seeing that, and I think that positions him strongly to, do well down the road.
As we look ahead to the debate tonight, how much do you expect the post-impeachment atmosphere to weigh into what we see from the candidates tonight, particularly after the response we saw from President Trump at the White House yesterday?
So impeachment has always been an issue that really rallies the base, the Democratic base, and also on Trump's side, the Republican base. And so I think that, for these Democratic candidates heading into some of these states, they might be more concerned with, potentially appealing to independent voters. And so I think that I wouldn't necessarily expect impeachment to be a big topic of discussion, because in the back of their mind, even though it's Democrats that are voting in these primaries, it's, going to be, they're all looking ahead kind of to the general election. And so I think that Trump kind of did his victory lap yesterday, and there might be some discussion of, the tone of the president's speech, but I wouldn't necessarily expect it to be a huge topic of discussion. Democrats do better when they focus on, pocketbook issues and talking about what they're going to bring to the table for voters.
And it seems as though that discussion is continuing on the president's side now with these reports that Alex Vindman, the lieutenant colonel who testified at the House impeachment inquiry, could be reassigned.
Yeah, and that would be a significant move by the White House if they do take that tact, and it would send a clear message to other folks who might be looking to either be potential whistleblowers or, speak out against the Trump administration, that isn't tolerated. And so I think that would that would potentially give people some degree of pause if Trump does do that, and it might raise some red flags and concerns about, retribution for people who speak out against the president.
Thanks for this morning. That's Bloomberg U.S. Politics editor Kathleen Hunter. You can read more about all this on Bloomberg.com or on the Bloomberg terminal. And a reminder that you can hear the New Hampshire debate from Manchester live on Bloomberg Radio. It begins this evening at 8 p.m. Wall Street time, followed by a special edition of Bloomberg Sound On with Kevin Cirilli after the debate. Karen.
Nathan, thank you. 6:56 on Wall Street. Time for the Bloomberg Small Business Report. And here's John Tucker. Good morning, John.
And good morning, Karen. In 1995, Susan Ward opened Rock City, a cafe in Maine in the fishing town of Rockland. Now, 20 years later, Ward wanted to cash out and travel, but she feared a buyer might change the character and charm of her small business. The solution was converting Rock City to a cooperative, owned and managed by the staff. 17 of the 35 workers opted to join. This is an idea with growing appeal for small business owners. Baby boomers own two-thirds of small businesses in the U.S., and as they move toward retirement, many have no succession plan, and finding a buyer isn't always easy. Recent federal legislation has made it easier for co-ops to get loans and for small businesses to finance a conversion. And a 2018 law requires the Small Business Administration to make loan guarantee programs more accessible to worker-owned co-ops. I'm John Tucker. That's your Bloomberg Small Business Report. Karen.
All right, John, thank you. And futures are lower this morning with S&P futures down 11 points, Dow futures down 115, NASDAQ futures down 36. The DAX in Germany is down 0.6%. 10-year Treasury up 10/30 seconds. Yield 1.60%, and the yield on the 2-year 1.41%. And NYMEX crude oil is down 0.7%. It's at $50.58 a barrel. Bloomberg Surveillance straight ahead with Tom Keene, Jonathan Farrell, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Peoples of London, don't be like Sergei, slaving Monday to Friday, then so frazzled by weekend, cook Sunday lunch. You need me, Alexander, to save the day.
Oh, so Sunday lunch means meerkat meals?
Exactly. Get 2 for 1 on food with meerkat meals at your local favorites, like Little Napoli, when you buy through Compare the Market.
Qualifying purchase, app only, 2 for 1 on selected food, participating restaurants, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
Good morning, this is your Southern service to London, Victoria. Join in our onboard quiz. Here's our next clue. What C sounds like a handheld party food but keeps you dry and protected from the rain? Not canapes, canopies.
At Southern Railway, we're investing over £7 million into making improvements for you, like canopies, cycle parking, and new platform lighting across more of our stations. Find out more and book your tickets at southernrailway.com. Southern Railway, we're with you.
Can you make a call given the data?
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
American economic power and future depends on trade deals.
In many of these countries, we're still seeing people struggling.
Finance.
We're in this vortex of uncertainty. These big companies, they just sometimes lack focus.
Investment.
The markets have become a little bit too addicted to the Fed.
Timing the market is just so difficult.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
From New York City for our audience worldwide, good morning. This is Bloomberg Surveillance. Coming up on the program, Payrolls Friday, looking for another month of solid gains. Presidents Trump and Xi reaffirm commitment to the Phase 1 trade deal, and recession risk lingers in Europe. German industrial output plunging. From the Bloomberg Interactive Brokers Studio, hello Friday. Here is your Friday morning price action. Equity futures lower by 11 points. We're down 0.33%. In the bond market, Treasury yields down by 3 basis points to 160 on 10s. And to get you set up in the FX market, euro dollar coming in by 0.33%. Alongside Tom Keene, I'm Jonathan Farrow, together with Lisa Abramowitz, counting down to the payrolls report, Tom, 90 minutes away.
The dollar's stronger, and there's a lot going on here. And I asked this question of Peter Dixon an hour ago with Commerce Bank. I said, does the Fed do a mercy rate cut to help China out with the news flow? And so it's a jobs day. But, when you talk to Lawrence Kudlow today, you got to talk about GDP markdown off what we heard from Jeff Curry yesterday of Goldman Sachs on China GDP.
It's the big unknown, isn't it, Lisa? And the data out of Europe really hasn't been pretty. German factory orders dropping by the most in a decade earlier this week. Industrial output down and down hard.
Yeah, it could be a recession for Germany in the fourth quarter of 2019. There's a question that I have, which is the tipping point between Goldilocks, which is what everybody's saying, slow growth, low inflation, stimulus, and stall speed. And I think that that's the sort of key underlying existential question, if you will, underlying the data that we get out today.
Yeah, the Fed wanted to nail a soft landing, and the runway to do that is incredibly tight.
Yeah, but the facts have changed. It's John Maynard Keynes 101. The fact is we have this massive exogenous shock.
You won't get me disagreeing with you. Yeah. I think the risks around the outlook have really shifted over the last month.
Hold on a second. This is the question, right? Has it been a material impact? Yes, it has for a quarter, but the traditional trajectory has been that you make it up in subsequent quarters. That said, the longer this goes on, the more people think that this is going to be longer lasting.
But Dow 29,217 on futures. I'm saying they're pricing in some form of further accommodation because the facts have changed.
The facts have changed. Things have shifted. Look at the guidance coming from companies. We had Burberry out this morning. They've scrapped their outlook for the year. Of the stores that are open on the mainland in China, sales are down 70%.
Wait. They scrapped their outlook because you only bought one set of clothes for Baby Charlie.
Me?
No, you did the whole head-to-toe thing for Baby Charlie, and it was great. I loved what you did. But they thought you were doing a spring opening.
Only one of us here is doing a lot of Burberry shopping, and it's you, and it's not me. The other company that I want to talk about, Lisa, is Apple. It's exposed on both the demand and the supply side, and the stock is doing nothing. Hon Hai earlier this week cut its outlook for the year. Yeah. Hon Hai this morning telling its staff to delay their return to the HQ.
Lisa, Hon Hai, 803,000 employees, at least, is what's listed on the internet.
Yeah, they're basically saying don't come in on February 10th. And they are known as they're the iPhone producer, but they actually manufacture for a lot of different companies globally.
Can we do the geography on that? There's Hong Kong.
Yeah.
And then you go over the border and Shenzhen is there.
I think so. Take your word.
I rely on you for the geography.
Yeah, exactly.
No,
you've got the
Andrew,
map up
you want to do some geography with us, Andrew Hollenhorst?
Yeah, sure. I'll be
Shenzhen's right over the border, right?
You got that right, yeah.
Okay, see, I would
Is that what Andrew's here for?
Yep, okay. That's Andrew Hollenhorst.
Bring in a geographist from Citigroup.
He joins us from Citi. He's the chief US economist. It's Andrew Hollenhorst. Andrew, we won't do geography for you. We'll do payrolls first. Report comes in around about 86 minutes. What are you looking for?
So we think it's going to be a strong report. 187,000 is our above consensus forecast. But the important thing to note is that's boosted by the warm weather. So you're probably going to see this in construction, leisure, and hospitality. So we'll be looking, is it kind of real strength, or is it just warm weather?
I think this is something we've got to grapple with. How do you discount the China story in a set of numbers that probably haven't priced it? What do you do with this payrolls report at 8:30 Eastern with that in mind?
Yeah, so the way I would look at all the data coming in over the next month, or really the next couple months, is just you've kind of cut out the response you could see from a positive surprise. We know that there's this generally more concerning risk factor that's out there. So if you see some negative surprises, I could imagine the market having a big reaction. If you see a positive surprise, I think it's hard to really price that much more positively.
We're not expecting the Fed to move on a positive surprise. If it's a downside surprise, the question's going to be asked. A downside surprise going into a month of real weakness that most people expect. And a big question, have we seen a material reassessment of the outlook? The risks around the outlook have clearly shifted. Do you think the Fed call this a material reassessment?
I don't think they're there yet. I do think that all these risks lower the bar for what they need to see as a material reassessment. And it's interesting. I mean, we're talking about weakness in China, weakness in Europe, but the Fed is where you have policy space left to cut. So, you could think about the Fed cutting in this scenario, but it is really the rest of the world that's
policy space, perhaps, in the sense that they can actually lower rates to something that still is above zero. But the efficacy of that is under some serious question, especially because we're not getting the wage increases that a lot of people were expecting this late in this cycle. From an employment standpoint, a jobs standpoint, how much would additional rate cuts actually do?
It's hard to imagine that you could boost the labor market in the U.S. that much further from where it is already. I mean, we were talking earlier, we're at historically low unemployment rates, historically low initial jobless claims rates. So it's hard to see that really coming through.
So all it would effectively do is push up asset prices.
I wouldn't say all it would do is push up asset prices. And by the way, pushing up asset prices is going to spark consumption. I mean, that is going to be positive for job growth. So I don't want to say that there's no positive effect of further rate cuts. But are there diminishing returns to those rate cuts? Absolutely. And we're in that period of diminishing returns now.
I'm looking at Andrew, and I'm going to go back to George Bush. I'm going to say 2004, Morning in America, pulling forward the Reagan belief. I'm looking at my Bloomberg screen, and if I saw this jobs data in 2000 or 2004, whatever, this would be truly Morning in America. Why is there so much angst out there? If I'm seeing 3.5%, you're saying 187, which is a bang-up number given demographics, and labor participation is actually doing almost well. Why is the tension out there? Why is the angst out there?
Yeah, so I think looking at these numbers, we would think that this would be just an amazing time in the economy where everyone is feeling great about it.
Yeah.
If you look beneath the aggregate numbers, that's where you look at issues like inequality, and that's one thing that we know has been trending in one direction over multiple decades now. I think it's behind a lot of what's going on in our politics and the polarization that we see globally. So it's a global phenomenon, it's a multi-decade phenomenon, and just driving the unemployment rate down to 3.5% doesn't change that.
Andrew, what we found, though, is that the Fed was wrong, weren't they? A couple of years back, they should have run this a whole lot hotter than they did.
Yeah, so I think wrong and right. I mean, I think we should give a lot of credit to former Fed Chair Yellen. She was talking about this years ago, the idea we could have a high-pressure economy.
Sure, and then she didn't follow through, Andrew.
But there was, it is amazing the transition, 3 or 4 years ago, and we were looking at unemployment rates that were dropping to 5%, 4%, and thinking, that was the time you needed to be raising rates because you'd be really concerned about all this inflationary pressure. Absolutely, that thinking has changed.
This just goes back to the same conversation we have every single month. Has the relationship between a low unemployment rate and price pressure, has that relationship fractured somehow over the last 10 years, and why?
Well, clearly it has in the data. You just look at that scatter plot and it's a flat cloud now, where you used to see this Phillips curve relationship where lower unemployment would drive higher prices. So I think we're seeing some effect on wages, lower unemployment driving higher wage growth. It's still muted, but it has picked up, and you're seeing lower wage workers wages rising at a faster rate. Where you're not seeing that flow through is prices, and that's partly just because corporate profit margins are wide, and you're able to reduce those profit margins as wages go up.
Corporate profit margins are wide. It's a corporate share with, as a general statement, a diminished labor share in the economy. Labor consumes, labor votes. What's the mood of labor out there as they see a diminished labor share with an Eisenhower-like unemployment rate?
Yeah, again, I mean, I think it's going back to that theme of inequality, the idea that you have shifted the share of income away from workers towards corporates. That's part of the inequality. And again, that's part of what you see our politics responding to.
I'm struggling to understand what it would take for companies to spend more on capital expenditures, to actually pay workers more at a time when they all say that it's hard to find talent. There seems to be a narrative gap here. They say it's hard to find workers, but they're not paying them more. Why is that?
So part of what's been going on in the labor market is that participation rate has been going up. So even though it's hard to find workers, well, more workers keep showing up who you didn't think were going to be there. So ultimately, you do put workers into these positions. That is driving somewhat stronger wage growth. On the capital spending story, that's more surprising to me because at this level of the unemployment rate, you would think you'd be investing aggressively in labor-saving technology. You see that a little bit more on the intangible capital side, but we've actually seen a pickup in IP and software investment, but that equipment investment has stayed weak, and I think that's, uncertainty, weakness in the global manufacturing economy.
What are you going to ask Mr. Kudlow today?
A little bit later.
What are you going to
Focus undoubtedly is on China and the phase one deal, for me at least anyway. I think that we're setting ourselves up for failure later this year if we think that China can meet these targets on agricultural purchases, on energy purchases, on all the kind of things that they agreed on in this phase one agreement. China's shut down. We can see that in the steel mills, can see it in the refiners. I don't see how they come out the other side of this and meet some pretty punchy targets.
What's so important here, folks, is if you have a Bloomberg terminal in front of you, we see a headline flow, which is extraordinary. And it's not just Burberry or whatever. The mass of headlines is a slowdown.
One theory is the reason why China cut tariffs on U.S. goods imported to China was precisely because they wanted to get ahead of the blowback that they're going to get when they don't meet their targets here. So that's sort of one theory, and it'll be interesting to see if they illuminate a little bit more on that.
The President of the United States and the President of China having a phone call overnight and apparently reaffirming their commitment to the phase one agreement. It will be a focus of the interview a little bit later this morning. Look out for that on Bloomberg TV and on Bloomberg Radio at around about 9:45 Eastern to get the White House's response to the payrolls report. A special thanks to Andrew Hollenhorst, City Chief, U.S. economist. The payrolls report just around the corner. Your median estimate 165. Quick number, Andrew. What are you looking for? A little bit later this morning.
187,000.
187. An upside surprise. That's what City's looking for a little bit later. Shall we get some news? I believe that Michael Barr's joined us from New York City. Good morning, Michael.
Good morning, John. Good morning, Tom. Good morning, Lisa. With the Iowa caucus in the rearview mirror, the Democratic presidential candidates prepare to face off on the debate stage once again in Manchester, New Hampshire tonight. Bernie Sanders and Pete Buttigieg are virtually tied in the Iowa caucus with all of the precincts counted. However, Sanders in New Hampshire says his campaign is winning the popular initial vote by about 6,000 votes.
In a election with voter turnout of approximately 180,000 people and with 8 strong candidates competing, a victory margin of some 6,000 votes is pretty decisive.
Bloomberg will carry tonight's debate live starting at 8 p.m. Wall Street time, followed by a special edition of Bloomberg Sound On with Kevin Cirilli. Meanwhile, the new poll shows Pete Buttigieg is catching Bernie Sanders in New Hampshire. According to a Boston Globe, WBZ-TV Suffolk University poll, Sanders has 24%, while Buttigieg is a close second with 23%. Senator Elizabeth Warren is third at 13%, while Joe Biden is fourth with 11%. 12 Chinese nationals on the Royal Caribbean ship were isolated after experiencing some breathing problems and pulmonary issues while on board. The CDC and local health officials will test the quarantine guest as the ship has docked in New Jersey this morning in Bayonne. There are no confirmed cases of coronavirus on the Royal Caribbean Anthem of the Seas, but several passengers who are from China have been quarantined just in case. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thanks so much. Futures at -10. The number here this morning, and I believe it was John, you alluded to it. Joe Biden, 11% in New Hampshire. I didn't expect that. I thought it'd be 13, 14, 15 like in Iowa, and it's just not happening.
It's the race between Buttigieg and Mr. Sanders right now,
where we are Wednesday next week. I mean, the tradition is you go to New Hampshire and you sort some things out. You just wonder where that will be. Futures at -10, Dow futures -107. Yields in sprightly here. We're in 3 basis points on the 10-year, 1.61%. It is jobs day. Stay with us. This is Bloomberg.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the...
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
WW Weight Watchers Reimagined have a new customised weight loss programme, MyWW, where no foods are off limit. Just fill out a simple assessment and get matched to a plan that suits you. You love eating carbs, cooking at home or eating out? No problem with this new customised plan. Discover which new MyWW plan can make losing weight easier for you. Join now and get 50% off your first 3 months. Offer ends 8th of February. Subscription fees and conditions apply. Mainland UK only. See website for details.
It's 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
It is 7:17 on Wall Street, and Bloomberg Daybreak is out on customer terminals, bringing you all the news you need to start your day. Let's get a check at the latest headlines with Hannah George at the Bloomberg Daybreak desk. Good morning, Hannah.
Good morning, Karen. Tidjane Thiam is leaving Credit Suisse after a power struggle with the chairman. The CEO will be replaced by Thomas Gottstein, who currently leads the bank's Swiss unit. The number of coronavirus cases on a cruise ship in Japan has tripled to more than 60. The death toll has now passed 600, with confirmed cases eclipsing 30,000. Presidents Trump and Xi spoke on the phone to reaffirm their commitment to the Phase 1 trade deal. According to the White House, President Trump also expressed confidence in China's ability to fight the coronavirus. And on the earnings front, Uber is forecasting its first quarterly profit by the end of 2020. That's a year earlier than expected, though it says gross bookings will dip in the first quarter. For all the news you need to start your day, check out Daybreak on your mobile phone on the Bloomberg Anywhere app. Karen.
All right, Hannah, thank you. S&P futures down about 9 points. Dow futures down 88. NASDAQ futures down 26. The DAX in Germany is down 0.5%. 10-year Treasury up 9/32, yield 1.61%. Yield on the 2-year 1.42%. NYMEX crude oil is down 0.8% or 40 cents at $50.54 a barrel. And COMEX gold that'll change down 70 cents at $15.69.30 an ounce. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. Jobs Day. We'll go beneath the headline date at 8:30. Wrapped up here. A lot of good conversation. Jim Glassman will join us, knowing the fabric of American trends in employment. And then Jeffrey Rosenberg scheduled to be with us with BlackRock, of course, delving into the fixed income response as well. 5 things. We got to start with Germany, which is off the U.S. radar. And I don't mean like the election and David Folkert's Landau yesterday was brilliant with Deutsche Bank. And that, Lisa, you mentioned it. John, recession. Are we really back on recession watch in Germany? And they're really linked at the hip to China.
Well, here's the thing. We're not back on recession watch. It never went away. Recession risk lingered towards the end of last year. We see it in the factory orders. We're seeing it in industrial output. Industrial output plunging the most since the financial crisis. So we've come into 2020 on a shaky footing before getting punched in the face by another growth scare. I'm worried about Europe, really. The economy doesn't look great, and the policymakers don't look able or willing to respond anytime soon.
And this just isn't the output. This also comes after factory orders declined at the fastest pace in more than a decade as well. So this is also on both sides, and we haven't even seen the effect from the coronavirus.
Yeah, what's the ammo they have? Forget about all this fiscal talk. I mean, that can happen. I get that if there's terrible results. At the zero bound, what's the ammo any given central banker has?
So they're at negative 50 right now. They've gone to tiering. If I look at the other central banks with negative interest rates, might look to Switzerland, say the S&B have also got tiering and they've got a negative rate of negative 75.
They also own a lot of Apple stock, right?
So maybe they go another 25 basis points. I don't know. Maybe they boost the asset purchase program. I don't know. But I think one thing we all know is that they don't have much left, and not many people believe in their ability to really stimulate that economy anytime soon.
Maybe the Swiss National Bank will buy Tesla shares?
That'll definitely help the global economy. I think that there's a big question with China, right? Because a lot of the German economy does hinge on China demand. And so this is the big question is, can China reinflate its economy to help Europe out?
Well, let's go all O'Leary. You're going to speak to Dr. O'Leary, I believe, at 9 o'clock this morning. I mean, his phrase, the unknown unknowns. This is mega unknown unknowns.
And Mohammed, I think, is not comfortable with the amount of risk-taking that's still been taken. The buy-the-dip mentality just has not been shaken.
Yeah, but let's conflate these two right now. We got China and equities that we're talking about. I'm sorry, equities are elevated, gaming a Fed rate cut. That's all there is to it.
Well, let's talk about a couple of single names, shall we? Burberry, scrapped its outlook, has talked about plunging sales on mainland China stores that are still open. Check out where the stock is in London trading. You tell me. When it came out, it gapped lower. Where's it now? Burberry is down by 1.21%. That's nothing. Apple in the pre-market is hardly doing a thing, even though its biggest manufacturer is out there saying we've got to cut our outlook, and it's telling its staff not to come back to HQ.
And you're seeing this with Adidas, you're seeing this with Nike, a whole host of companies that have come out and said that they're closing stores, Starbucks. But there is the question here about transitory versus longer lasting, and especially with the iPhone or luxury goods, people expecting that perhaps it'll get slowed for a quarter, but the people will compensate later. That's going to be a harder sell as this goes on for longer.
Johnny, Icon striped cotton jumpsuit, $180.
What are you selling?
It says for baby Charlie. I mean, that just says it.
What about for?
It's like a jumper kind of thing.
What about for Daddy Keane?
No, I don't. I have the rings in the closet.
I can see it in a onesie.
I can see Vet Bill in a Burberry outfit.
We looked at that actually. We went with a handmade thing from downtown Manhattan.
Vet Bill's got a Tiffany collar.
I have zero doubt about that. Zero doubt.
Equities elevated on presumed rate cuts. 29,222. The equity market. I mean, do the real yield in the equity market. I mean, I'm sorry, it's rate cuts.
I agree with you. That's why we've got multiples at the peak of, say, this bull market so far. Look, for me, here's my problem right now. We've come into the year with a more constructive view. That's fine. But are you telling me the risks around that outlook haven't shifted to the downside over the last month? Is anyone out there saying that hasn't happened? If that hasn't happened, shouldn't this be a market that adjusts to that shifting risk?
Well, here's the question, right? If there is a material shift to the downside, the Fed will cut rates. The key question to me is how much further can that bolster equity prices if we do get a material threat to the economy? This, to me, is the key question.
But here's the distinction. A material slowdown in America or a cratering China. I'm sorry, they're going to blink. They're linked. They have to. They're linked. They have to.
Well, what's the channel? What's the channel into the U.S. economy? It comes through the market, doesn't it?
I would agree with that. That's
going to
really
be the primary channel.
Question,
that will be the primary channel for the slowdown from Europe, from China. It will be into financial markets.
I don't disagree with
And
that.
right now, things look loose.
What about manufacturing? What about when it comes to commodities, especially since the U.S. is a net exporter?
Don't disagree, Lisa, but what we've seen through much of last year is even with a manufacturing sector that's really, really struggling, the labour market's still rock solid, the service sector's still okay, and GDP's still in and around trend growth.
But you're not seeing the capital expenditures, and arguably that's because companies don't have conviction about the global economy. And if they had conviction about the global economy, they'd invest more. And there is a question, how long can the consumer keep going along without that capital expenditures taking off?
I got a big countdown clock here in our studio, folks. It says a minute, seconds to the real yield. What are you going to do on the real yield?
There's no real yield.
There's no real yield.
The show's happening, but there isn't any real yield.
No, there's no real yield out there.
And that's been the problem.
That's been the story. I mean, to me, there's a huge ambiguity in the bond market, as Lisa, you correctly stated, non-correlated, then correlated with equities, and now we're back to sort of a mess.
Then we've got to talk about inflation too. Can inflation start to pick up? Ken Griffin made some headlines, hedge fund legend, in the last 24 hours, saying at a economic club in New York luncheon, in the US there is absolutely no preparedness for an inflationary environment, and I don't think anyone disagrees with that.
No, because we haven't seen inflation, and there's a question of what would happen. Probably not that great.
Yeah. Jim Paulson out yesterday was looking at 2.75% published yield down there. That's very Ken Griffith as well. John, I want to talk Premier League, but there's no big games. There's no big games this week.
During this mini winter break.
What is that? What is it like in England when there's no like ginormous derby?
You just go to the pub and don't watch the game. You just drink instead.
Okay, thank you. That's the advice we need. We'll carry that forward into the weekend. It is Jobs Day. We'll do that before we go to the pub and stare into our John Courage. Futures at -10. This is Bloomberg.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us #1 in client support, #1 in firm leadership, #1 in operational support, #1 in compensation, #1 in professional development support, and #1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA/SIPC, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/awards.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is for up to 50% off selected floors and beds. For first-class fitting. For kicking your heels off. For overexcited kids. And pets. For thrills and spills. For a special welcome home. For up to an additional £250 off your total flooring order. Carpet Right for life. Terms and conditions apply.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
At Wix, we'll create your dream kitchen from design to show-off ready and take care of everything. And now, save a third on showroom kitchen units. Book your free design appointment today. Cure your house embarrassment with Wix. For minimum spend, terms and exclusions, see wix.co.uk.
Winter joggers of London, it's chilly. Your legs are caked in mud and your nose is running faster than you. Then, get that heating on. You deserve it. Thanks to Hive Active Heating, you can control your heating wherever you are with a tap of the app, which could save you up to £120 a year by never having to heat an empty home. Buy today and get a free Amazon Echo Dot. Search Hive Heating. Hive services require broadband and Wi-Fi. Terms apply.
Do you go on the same holiday every year? To the same country, in the same hotel, with the same sea view, visit the same ancient monuments, lay by the same dolphin-shaped pool, meet the same Barrys and Sandras, and wear the same Hawaiian shirt that you'd never wear at home? Then maybe it's time to switch it up, starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
The biggest weekly gain on the S&P 500 going back to June 2019. In the bond market, treasuries firming up, yields lower by a little more than 2 basis points. Call it 3 on a 10-year to 161 on 30-year yields. We are back to 2.075%, Tom.
Can I just say, folks, for those of you that need to improve your Twitter feed, to see Lisa Abramowitz back-to-back with Jonathan Farrow with a follow-up of Look How in My Feet. You guys are killing it this morning. Lisa's got the fancy virus bar chart with all that serious agony. And then, John, you follow up with a Burberry observation with a great Bloomberg chart.
You're following us on Twitter.
Yeah, you guys,
That's what
folks, if you're
you've
home,
interrupted the show to talk about Twitter.
Who's Queen of Charts? Are you Queen of Charts?
No, Hillary.
Hillary's
Are you the Queen of Charts?
No, there it is. Out on Twitter, Lisa Abramowitz and John Farrow. Very cool.
Thanks. Payroll's coming up in an hour. Here's your estimate. 165 is your median estimate for the payrolls report a little bit later this morning. The unemployment rate set to stay at 3.5%. Wage growth, looking at average hourly earnings month on month. 0.3 is your estimate, 3% year on year. Tom, not just about the payrolls report this morning. Big focus on Credit Suisse. The tension between the CEO, Tidjane Thiam, and the chairman was boiling over, and Tidjane Thiam has lost the fight. He is gone as the CEO. Joining us now, I'm pleased to say, is Jan-Patrick Barnett, Bloomberg's finance reporter. Jan-Patrick, let's talk about it. Just why did Tidjane Thiam lose this fight?
Yeah, that's the big question. We don't have a fully satisfying answer on, not quite yet. So, as everybody is assuming, it's related to the spying scandal that started last year in September, where Credit Suisse followed its former head of wealth management, who's moving over or has moved over to UBS, and that got a little bit out of hand, and the police was looking into it, the regulators looking into it, and it looks like this is now falling on Thiam's feet.
Okay, but fine. If I wander off Bonstroff there to Cafe Lip, not that I've ever done this, but if I went down to Cafe Lip, this is just about Switzerland. The Swiss want to get back the Swiss culture after a significant share underperformance by Mr. Thiam. Isn't that all this is about?
Well, I'm not so sure, and I mean you have to acknowledge that he did a good job in realigning the bank to strategy, to give it a more conservative profile, but also a more steady earnings profile, and investors appreciated that, I would say. And as you can see, with the new CEO, there is no big. I mean, he has an investment banking background. Don't forget about that. And from where he's coming from, I don't see that they are giving a big change in direction to the Swiss lender now. So, of course, he's a Swiss man. He's different to Thiam, but I wouldn't call that the Swisseration of Credit Suisse or something like that.
Jan-Patrick, so many people are going to ask this question. Is there something we don't know?
I guess there is a big potential for some very nice magazine stories, or even like Bloomberg Terminal stories about what happened behind closed doors. Certainly, there must be something that maybe tied TM closer to the spying scandal or anything else that ended up in this escalation. It's certainly going to be interesting to see as well how the shareholders will react in the coming days and weeks. We had like a couple of top investors like being very, very vocal in public about backing TM, and it's going to be interesting to see what they're doing next. If they start another power struggle, or if they maybe like retreat and sell their shares. We will see.
How is TM's tenure graded, given the fact that since 2015, when he started to become the chief executive, the shares are down by 32%?
Yeah, for sure. But I mean, that's like more an issue for the whole banking sector, so I wouldn't blame that on his performance alone or of the performance of Credit Suisse. Banking stocks in Europe had a horrible time, even for the last decade, I would say. And with the low yields, it was hardly bearable for them to make any profit. But in general, I think think about this. Like back in the days, Deutsche Bank, Barclays, Credit Suisse, they were all named in the same sentence as being the underdogs in Europe, and Credit Suisse and Barclays to some degree as well have done a good job to get out of that. And Deutsche Bank is right now on the edge of doing so, but I would say it's the only one left over where it's difficult.
What's the plan forward? Is it less Asia, less international? Do they hunker down in Zurich? I mean, I don't see that, but is it more asset management? What's the vision?
Well, I guess it will take a little bit of time until we see like the details of the management of Gottstein, but I don't expect that they change the overall course of the bank dramatically. Don't forget that they had intentions to spin off the Universal Bank in Switzerland at some point eventually, and so that would have made Gottstein a CEO anyway over the short to midterm. So I guess like the general course will stay, and he will make his mark in some details here and there.
Jan Patrick, this has been great. I would really suggest the Noix de Saint-Jacques Fresh de Noverge Marinée au Citron Vert.
Oh, dear Lord.
I think it's Brasserie Lip, and you and I have been there together.
You meant hamburger.
We've been there.
You went with me to Brasserie Lip?
Yes, there might be a reason you don't remember.
Jan Patrick, but when we go, I'll remember. Thank you so much for reporting this morning on this. John, we did a whole series of bank executives, and they go up and down. I mean, David Rubenstein with his great interview with Brian Moynihan. I mean, every bank has a story. Credit Suisse, from the Ute of Credit Suisse First Boston to the day they bought DLJ, I mean, it's just been, can I just editorialize and say it's been a mess?
It's been a mess. It's been a mess for many of the European lenders, with a basic question that many of them have got to answer.
And you covered Brady Dugan, right?
I remember going over there to speak to Brady Dugan, and he was always under pressure to scale back the investment banking activities. He was under massive amounts of pressure to do that. And then we had someone come into the bank and transform the business. But the perennial question that's asked the European lender, what do you want to be when you grow up? We've been asking Deutsche Bank that. We've been asking some of the big banks across Europe, what do you want to be? What do you want to look like?
Does Tim have the same issue of Dugan, that they're not Swiss? I mean, is that a germane? I mean, I say this with great respect, but is that tangible?
Look, I don't think that's a controversial question. I think that was a question asked at the time of his appointment as well. And it's not a surprise that maybe we have someone taking over the bank now that's head the Swiss unit.
I'm not going to weigh in on whether this is a culture clash. That's sort of another discussion, or whether there's something specific that happened here. But there is a question of the culture clash when you're trying to be an international bank. And this is an issue for Credit Suisse. It's an issue for the German banks, and it's an issue for the Japanese banks. And I know when you mentioned, Tom, the DLJ, the leveraged finance unit, the culture in that did not jibe with the Swiss culture, especially at a time post-crisis. So there is a question, how do you get the profits of a unit like that while keeping the Swiss culture?
Yeah. I remember when we went to Brasserie Lip.
Oh, it's coming back.
Yeah, I do know. It's coming back. You had the Velden Schnitzel. Oh, I can't even pronounce it.
You and I should do a tour, and we should go to the major financial hubs around the world.
We should.
And eat and drink. Because some of the stories that I've got, I'd love to put down. into a little magazine.
Redo, keeper of the Amex, I'm sure he's on board that. Let us do this. And this we do with futures at -9 on Jobs Day. The Bloomberg NJIT STEM report. It's brought to you by New Jersey Institute of Technology, a top 100 national university, in the latest U.S. News and World Report college rankings. Learn more at news.njit.edu. Here's Bob Moon.
Tom, Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. Who could possibly have predicted this? It seems some teenagers may be one step ahead of the new vaping rules. You know, the ones that are supposed to discourage teens from flocking to electronic cigarettes. Just as the Food and Drug Administration starts its narrowly targeted crackdown on reusable devices, such as the blockbuster Juul e-cigarette, parents, researchers, and yes, students are warning that some younger users have already moved on to a newer kind of vape that isn't covered by the ban on flavored e-cigarettes. While only menthol and tobacco flavors are allowed for those reusable devices, it doesn't apply to disposable e-cigs. Mike Chang is owner of Masterpiece Smoke Shop in New York.
When Juul pulled out their mango, creme brulee, and fruit, people noticed, this disposable pens that actually has multiple flavor. So I had people switching from the Juul for the disposables.
These disposable e-cigarettes are sold under brands like Fog, Stig, and Puff Bar in such flavors as Mighty Mint, Pink Lemonade, Blueberry Ice, and Mango Bomb. Critics of the FDA policy fear teens will simply switch to the cheaper disposables. At New York's Mount Sinai Medical School, tobacco researcher and pediatrician Dr. Karen Wilson says the disposables are very accessible and seem to be the new buzzy product. The FDA's top tobacco regulator says if it sees a product that's targeting kids, it will take action. That's the Bloomberg NJIT STEM report. Tom, Jonathan, Lisa.
Thank you so much. We got the STEM report. Now let's get some news. We've got our own Michael Barr here. Michael.
Thank you very much, Lisa. John, Tom, Bernie Sanders, and Pete Buttigieg are trying to continue their momentum as they head into tonight's debate in New Hampshire. Sanders and Buttigieg ended up in a virtual tie in the Iowa caucus, and a new Boston Globe WBZ-TV Suffolk University poll shows the senator at 24%, while the former mayor at 23%. The presidential candidates will face off in Manchester. Bloomberg will carry tonight's debate live starting at 8 p.m. Wall Street time, followed by a special edition of Bloomberg Sound On with Kevin Cirilli. Meanwhile, he won't be on the debate stage tonight, but former Massachusetts Governor Deval Patrick is campaigning in Manchester. Patrick, during a CNN town hall event, says he respects Utah Republican Senator Mitt Romney's vote to convict in President Trump's impeachment trial.
And I commend all of the members of the House and the Senate who took this whole episode with the sense of sobriety that was intended, including, by the way, if I may say, Senator Romney, who stepped up. And I tip my hat to him.
The number of people on board the Diamond Princess cruise that tested positive for the coronavirus rose to 61 overnight, leaving more than 3,000 guests and crew on the ship, including 400 Americans trapped on board in Yokohama, Japan. Carrie Maniscalco, a passenger from Utah, says as the number of cases grow, the more nervous they become.
We want to come home. We're desperate to come home, and we want everybody to be safe. Obviously, we don't want to put anybody at risk, but we really would like, to get home as quickly as possible.
In China, more than 635 people have died from the virus. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thanks so much. Futures at -10, Dow futures -99. Of course, John, if we went to Singapore, we could be at the Post Bar, which is wonderful. Willie Pesic and I had a wonderful night there.
You've told me some great things about it.
The Fullerton Burgers, $36 Singapore dollars.
Are you looking for sponsorship?
You translate. I just think the Fullerton burger would be, good. You could have the Wagyu beef sliders.
How much is that?
That's $21 for like a little,
a little bite,
a little bite kind of thing. But
I'm in.
So I think it could work. A global banking dining.
Who would sponsor it?
Lisa Bramwell.
Lisa Bramwell would sponsor it.
She'd go with us. It'd be great.
I have to go get a drink of water. I'll be right back.
Lisa can do the show. And you and I can go off and
go have fun.
I think it would be fun.
Is this not fun? Is doing the show not fun?
I think it's fantastic.
It's fantastic. Fullerton Hotel. We say good morning to all of you listening in the Singapore evening. We've had some very good memories there over the years. Futures and you watch yourself. I'm selling Singapore. Help me here. Dow futures negative 103 and the VIX 15.40. What's your job number? I never do this. I don't like to predict a number, but everybody's sort of lifted up off ADP.
Well, I'm just saying the median estimate's 165. Very slight lift, though. Not a big one. Previous number 145. If we get a month of expansion, 112 consecutive months of uninterrupted job growth in the United States of America.
And we're talking about 187, 165, whatever it is, and everybody was certain it would be a lot lower number 3 years ago. Stay with us on this Jobs Day worldwide. This is Bloomberg.
With the Bloomberg Business of Sports Report, I'm Michael Barr. It's a U.S. professional league that is rapidly gaining clout in the sports world. Major League Soccer will give its players higher salaries and a share of its next media rights deal in a new collective bargaining agreement. Each MLS club's player spending budget will rise to $11.6 million by 2024 from $8.5 million in 2019. The league also says the pact also calls for a higher minimum annual salary for senior roster players and increased retirement benefits. Colorado, Illinois, Michigan, Montana, and Washington, D.C. could have sports book by mid-year, some in time for the NCAA basketball tournament to drive bets at FanDuel and DraftKings. And that is a Bloomberg Business of Sports Report. I'm Michael Barr, brought to you by Marcus by Goldman Sachs. With a high-yield online savings account, you can money.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential and change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Where are we?
The New Forest.
But I thought we only had the Mini Countryman booked for a test drive. We can't stay here.
We're not going to.
This isn't exactly what I meant.
Relax. With Mini's new 48-hour test drive, you can use the Countryman for exactly what it's built for. Exploring. Plus, it's an SUV, the largest Mini in the range, so you can pack loads more in.
Great. Where next?
Well, you know how you've always wanted to try kayaking?
The Mini Countryman 48-hour test drive. Visit mini.co.uk to book yours. Mini. Who's in? Test drive subject to status and availability. Terms and conditions apply. Participating Mini retailers only.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Stocks and U.S. stock index futures are slipping at the end of a week of big gains amid some lingering worries over the continued spread of the coronavirus and ahead of the employment report for January. The euro falling as data showed German industrial production had the biggest monthly tumble since the financial crisis. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down about 10 points this morning. Dow futures down 103. NASDAQ futures down 33. The DAX in Germany's down 0.6%. 10-year Treasury up 8/32, yield 1.61%. Yield on the 2-year 1.42%. NYMEX crude oil is down 0.9% or 46 cents at $50.48 a barrel. COMEX gold little change, down 30 cents at $15.69.70 an ounce. The euro 1.0959 against the dollar. British pound 1.2939 and the yen at 109.85. We do get the January jobs report at 8:30 Wall Street time. Wholesale inventories out at 10, and at 3 it's consumer credit. Luxury retailer Burberry Group is down 1.4% in London trading after scrapping guidance over the virus hitting sales in China. And Credit Suisse Group still watching those shares down 1 1/3% in Switzerland after it ousted its CEO. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. John Farrow and Lisa want to do a detailed jobs report coverage with Ellen Zentner, but we have to digress now. As the chief economist of Morgan Stanley went back to her really seminal market economic work with a fabulous op-ed in the New York Times over the weekend. Millennials aren't spending all their money on avocado toast, actually. Ellen Zentner, congratulations on a sharp essay. What is the consumption that you see that was within your essay? Are millennials and the boomers and all of them, are we still consuming?
Yeah, we are, Tom, but I think what I wanted to focus on was something, believe it or not, that's not so negative about millennials. We've loved to feel bad for them graduating into a terrible labor market and accusing baby boomers of sucking up all of the wealth in the nation. But there's a very simple policy change here that has been overlooked that is actually helping millennials save more, right? Not just spend, but save more than, say, my generation did at their same age. I'm Generation X. And it's as simple as the continued rise of the presence of 401ks and specifically auto enrollment by companies in 401ks. So it's leaving millennials, yes, with less disposable income out of their paychecks. But they're saving more. They actually have more built up in financial assets today than I did at the same age, for instance.
Ellen, you were doing, global trout fishing, like trips, so you didn't save.
Well, but Ellen, this raises an interesting question here, especially as we look at the jobs report, and that is somehow the jobs market profoundly different and sort of what people are doing with the money. I mean, I'm just wondering, in other words, what are you looking for within the jobs report that will indicate the disposable income that people have to spend on stuff to keep the recovery going?
Well, I think so. It's a great question. We slice and dice wages to the minute detail, and wage growth been accelerating for the better part of the last couple of years, and most of that being driven by the middle to lower income or middle to lower paying sectors, whereas higher paying had really stagnated. And if we just break it out, it's really the supervisory workers where wage growth has stagnated, and that's much of that demographic effect of, as we age, Tom can tell you this, I can tell you this, at some point your income tops out, right? I joke and say I think mine topped out a few years ago. Yeah. But at the low end, when you're climbing the ladder, that's when wages are growing the fastest. And so we've seen the acceleration basically at the early stages of the ladder, but at the later stages, that's where it's topped out. What we've seen though in the last couple of months though, and so that has been driving general discretionary spending in the economy, whereas we've really seen high-end spending slow down, and it's been slowing down for more than a year now. What we've seen though in the last couple of months though has been disconcerting is that now wage growth has slowed, the pace has slowed across the board. We want to see that that's not a lasting trend, that does turn upward again, because it's been important that those lower income groups are where the accelerating wage growth has been, because of course from an impartial view from an economist, that's where your higher propensity to consume comes from, because they tend to spend more. Now millennials are the same, right? They're spending a high amount of their income even though they're saving through 401ks, but their spending differs than prior generations. For instance, and this would go back to the avocado toast, and maybe it's the social media effect, they're spending more of their after-tax income on food, off, out of the home consumption. They're willing to spend more on organics, avocado toast, other things. They're more aware of what goes in their bodies. They care what goes in their bodies, and they're willing to spend a much greater share of their income on that. That's what we're seeing in some of the trends by generation.
18-year Scotch doesn't fit into the Zentner.
It's probably not the best diet. No, Tom. Ellen, to wrap things up, I want to bring the Fed into the conversation. There's a belief at the moment, or at least a signal coming from the bond market, that this Fed will keep rates low, but they won't be able to generate inflation. What's the Morgan Stanley view on that?
I think it's going to be very tough. So we've got a few months here coming up. It's going to start with the January CPI is going to surprise to the upside, and the year-over-year comps comparisons to last year extremely easy when financial service prices collapsed. Then in March, apparel prices collapsed. So very quickly here, we're going to get close to a 2% core PCE year-over-year rate, and the Fed understands that's transitory. It's easy comps and the like, and then it's going to struggle to get higher thereafter. And so if they're saying they want to see a significant and persistent, return and above the 2% inflation goal, it's unlikely they're going to see that this year.
Ellen, jobs guess for later, for 35 minutes time. What are you looking for?
Oh, so boring. We're at 155, which is not far from consensus. I hate being close to consensus. The more interesting thing will be, what do the benchmark revisions look like? And then again, going back to the wage growth, does it look like it's continued to decelerate, or is it starting to turn back upward again? That's what we'll be looking for.
Hey, Ellen, great to catch up with you. Ellen Zentner there, Morgan Stanley chief U.S. economist. 35 minutes out from the payrolls report, guys.
I have a surveillance confession.
Oh, here we go.
I brought an avocado to work with me today.
Well done. Congratulations.
Yes.
Does that require a confession?
It
well,
does.
It just goes
it
into
does.
the cliche.
I was saying the other day, folks, this is shop at Whole Paycheck. You go down to produce and everybody just buys bananas, buys this, they buy, carrots, whatever. Buying avocados to people seems to be like they have to pause and analyze.
Oh, yeah.
Why?
Because you have to get it so that it's not overripe, so it's rotten, and it's not too underripe that it may not ripen to the correct ripeness.
Why do they cost so much? Is it a cartel?
They don't cost that much.
It costs loads. It's one of the only things that I nearly always check the price of. Avocados.
Well, how much is a loads?
Anything more than $2 for an avocado is ridiculous. And in Manhattan, you find a lot of stores that
in
charge
London
$2.
doesn't have avocado
Near
toast.
me,
Don't tell Ellen
it's
Zentner.
$1.50.
They've got black truffle flatbread for 24 pounds. Ellen Zentner, Morgan Stanley, thank you. Jobs Day in 30 minutes.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Ladies and gentlemen, Maltesers presents If Dating App Chats Were Real Life Chats.
Hey, Mike. Glad we matched.
OMG, Zoe. Me too. I saw your profile and I just thought, damn, this is a girl I can get down with. I'm thinking marriage, kids, getting old, but still having fun. I know it sounds crazy, Zoe, but I'm just getting mad digital vibes from your profile.
It's Jessica.
Awkward. Ditch the apps this Valentine's and swipe yourself some Maltesers.
The Grand DFS sale featuring Wallace.
Hello.
And Gromit.
Well, say hello, lad.
Every sofa is made to order.
By a speedy Sofa-matic machine?
By hand.
Oh, suit yourself.
So you can have your sofa exactly how you want it.
Made of cheese?
Not that exactly.
Oh, probably a good thing, eh, Gromit? It'd be gone in a jiffy.
The grand DFS sale is now on.
How about a cushion made of cheese? Or a footstool? Or a...
5 is in! What a run! Touchdown, Kansas City!
Congratulations to the Kansas City Chiefs on winning their first Super Bowl in 50 years and second in franchise history.
50, Watkins, 10, chase to the 5, into the end zone, touchdown! That may be all she wrote!
While the NFL's 100th season may be over, football never stops on TuneIn. Search NFL Podcast to stay current with all the off-season wheeling and dealing. And get ready for the 2020 NFL Draft in April.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Bayless. Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
I think the U.S. is going in for a couple of years of very, very strong growth.
The deficit by early in the next decade will start to become a real problem for the markets.
Finance.
The consumer is really strong right now.
We don't realize how good times are now.
Investment.
The biggest problem that people have in investing in stocks is that they get out of the market.
It's not supposed to be easy. Anyone who finds it easy is stupid.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
Good morning, everyone. It is Jobs Day. John Farrow, Lisa Abramowitz, and Tom Keene, thank you for being with us. Lots to dive into here. Huge news flow. I want to get to one angle on the markdowns we're seeing by companies as they consider China and consider maybe a more tepid retail environment in America on Jobs Day. We'll dive into that in a second here, and then we're going to do foreign exchange. Get to Jim Glassman, on to Jeff Rosenberg as well to really give you a framework for this American, not just labor economy, but the American economy as well. First of all, John, we've got to look at what we just saw, as you mentioned, out of Burberry and now out of Canada Goose, where basically both companies are, do you think it's China, or are they just getting out in front of it ain't happening?
Hey, look, I don't know about the it ain't happening, but I know about the China slice of the pie, and it is certainly hitting some of these companies. Burberry out this morning basically abandoning its outlook for 2020. Canada Goose coming out a couple of hours later and saying that revenue for the full year will rise as much as 15% from a previous outlook of as much as 20%. So you're seeing a material hit to the outlooks, and even with that material hit, we're still in a place where nobody knows what this year is going to look like whatsoever.
And this is something you pointed out early, John. Canada Goose shares plunging in response to this, yet already starting to bounce back. And this is exactly what we saw from Burberry and exactly what we saw from Apple. The idea that initially people really were looking at this and then shrugging it off.
On the jobs, and we just had Ellen Zentner on, the chief economist, in her wonderful essay in the New York Times, and maybe we're a little bit off the immediate report. Let's go to the report. Does this jobs report determinative for the Fed? I mean, if they get a number off, does it matter? If they get a number on, so what? If it's a bang-out number like ADP and claims, what do they do?
Wait for February. That's what they've got to do.
Yeah.
The January data has been so far so good. All data points in America at the moment for the labour market point to a very robust labour market. We've got to see what the survey data looks like for the month of February and then get a view on the hard data a month later.
And Lisa, March 18 is the next Fed meeting.
Yeah, and right now there's no cut priced into the market for March 18th, but a full cut, more than a full cut, being priced in by the end of December. And this comes as a huge question faces the market. What will a Fed rate cut actually do for jobs?
Is that rate cut pre-China, or is it because of China?
I can tell you, actually. Hold on a second.
John, what do you think? I mean, I don't know.
If you're asking me if the Fed was going to cut rates, it would be because of what happens with China. If you're asking why a rate cut would help, they want to protect financial conditions. Front and center, that is the main channel for any spillover from the global economy into the United States. Protect financial conditions, keep them loose, and so far, so good.
Just to give you a sense, on January 16th, I believe January 17th was when we really got the announcements about the spread of the coronavirus. On January 16th, we saw less than one rate cut priced into the market. We saw about, an 80% chance of a rate cut, whereas for now, it's basically, there's almost 2 rate cuts being priced in.
Jobs Day, and we go to Lawrence Kudlow, 9:45-ish. We call that, it's an ish interview. We're not sure when we get to Mr. Kudlow. But when you get to him, he's going to talk about a resilient labor economy, etc. But, John, I would suggest, and we'll talk to Jim Glassman about this, the wage growth question is still tangible.
I would agree with that. And I think they'd agree with that too. They'd like to see more, which is one of the reasons they've been out front over the last couple of years, really laying it on hard to the Federal Reserve. They think the Fed started to hike too quickly and should have let the economy run hot. Interestingly, the Fed has come around to that perspective as well.
And so Jobs Day lined up here. Let me get the economic data up here. Ken Pruitt, the late great Ken Pruitt would love this. 165,000 non-farm payrolls. Andrew Hollenhorst at 187 as well. Hourly earnings year over year, John, 3.0%. That's it. Mr. Stretch with us this morning.
Jeremy Stretch, CIBC Head of FX Strategy, joins us on the phone from London. Jeremy, let's start with the easy one. What are you looking for in 26 minutes' time? What's your number?
We're looking for 180, so we're a little bit ahead of the median that you've just been highlighting. We're expecting perhaps a little bit of an impact, maybe some census hiring, so that could be one of the factors where we are slightly above the consensus, but overall we are still consistent with employment growth running at around the sort of 12-month moving average.
How much weight does this jobs report carry, given what we're seeing play out in China at the moment?
Well, you're absolutely right that there is an overarching issue which does sort of compromise the data, and of course we shouldn't also lose sight of the fact that labour market data is one of the lagging indicators rather than leading ones, and I think that's one of the issues that we would probably overlay in terms of the importance of this data. Now, that's not to downplay it, but I think we need to see how the forward-looking data in terms of the services and manufacturing ISMs in particular play out over the next month or so. That's perhaps going to be a more relevant arbiter in terms of macro performance into the second quarter, but nevertheless it does seem to be the case that the US has opened the year in pretty rude health, and the economic surprise indices looks as though it's going to be powering through the cyclical high if we're right about the employment outcome today.
Data in Europe not great. I imagine the data out of China won't be terrific either in the coming months as well. Jeremy, question we're having around this table, debate we're having around this table is the Federal Reserve's role in all of this. Vice Chairman Richard Clarida speaking to Bloomberg in the last week saying that we're in a good place, the economy and monetary policy as well. Jeremy, do you get the sense they are in a good place, given the changes we've seen in the last couple of weeks?
I think they've given themselves an opportunity by taking that monetary policy stimulus and putting that in place late last year. So I think that's given them a little bit of leeway, and I think that does allow them to see how the data plays out, and they don't need to immediately react. And I think that's one of the themes that we're going to get from a lot of central banks, and when they do make public statements in the current environment, is yes, they are monitoring the situation, yes, they are aware of the downside risks, and they will react as and when there is realization in the hard data. But until we can assess the magnitude and the extent of the virus, particularly as everybody's looking for parallels with SARS in 2003, where we saw a sharp V-shaped downturn and or recovery, until we're certain as to whether it's going to be a similar outcome to that or whether it's going to be more protracted, it probably makes sense for the central banks to say, we are watching, we are aware, and we will be prepared to act as and when necessary.
Jeremy, one thing that people are trying to figure out is what the read-through from Fed policy will be to the dollar. If the Fed eases, will that actually create weakness? Right now I'm looking at the Bloomberg Dollar Index at the highest level since November of last year. I'm looking at the emerging market currency index having its worst day at one point since August. At what point do people start to look at this and say, this is just going to be the trend in 2020 despite calls for a weaker dollar?
Well, I think we do need to see how the data holds up. Now, we ended last year with a scenario where the dollar was well bid as trade tensions led to a little bit of a flight to safety, and of course we were also seeing what was akin to sort of U.S. growth exceptionalism compared to elsewhere. Now, we had assumed that there would be a narrowing in those growth differentials in calendar year 2020. That would be one catalyst for the dollar to cheapen up. But if we are going to see the extent of this flow through of the virus, adding or maintaining a negative risk environment and or keeping elevated degrees of economic separation between the US and elsewhere, then the dollar will be better bid. And I think that's going to be the story that we're really going to have to monitor over the course of the next few days and weeks to determine whether we need to change course in terms of the dollar's trajectory.
I love the phrase better bid. I'm going to steal that from you. 98.52 on the traditional DXY index. Jeremy, how close are we to the President of the United States, again, talking up the ill effects of a strong dollar? I mean, it's been a grind all week. John, what did we do? See, like 92 to start with, or 93, or we're actually down under 90 at one point, and we've worked our way up. I mean, how close are we to Trumpian complaint about a strong dollar?
I think we're probably not too far away. I mean, obviously, when we look at that broader DXY, which of course is largely a function of the relative weakness of the euro, we are getting close to those cyclical highs that we saw at the end of Q3 and the beginning of Q4 when we were up in the mid and low 90s. So I think if we can and do see a sort of a squeeze up towards the sort of 99 area in the very short term,
then it starts in. I agree.
I wouldn't be surprised if Mr. Kudlow, when he comes onto your show in the next, within the next hour, to perhaps make reference to the fact that the dollar is a little bit too strong.
Jeremy's helping you with your. Are you going to try to go for a 25-minute interview this time?
We'll see what happens. I mean, Larry and I could go for a long, long time.
You could.
Certain constraints around
Jeremy Stretch helping you with the dollar call there.
Jeremy, let's talk about euro dollar, shall we? Always look at a currency pair and think about the risk reward of being short or long that particular currency pair, given where we are right now. Below 110, the data out of Europe is not terrific. In fact, the data out of Germany is bad. The risk reward of being short at the moment, euro dollar, Jeremy, is that a trade you suggest people should put on, a fresh allocation of capital to that trade?
Well, I think it really depends on your assumptions as to the duration of the downturn in global trade trends, because, as you say correctly, the German data in terms of factory orders yesterday in industrial production were truly awful. And indeed, actually, it's not just industrial production in Germany. The French numbers were also very disappointing. But I guess the question is whether we think that this extended downturn is going to be much more protracted. I think we can safely say that the ECB is reluctant to consider additional monetary easing at this particular juncture. And in fact, if we are going to see some additional headwinds in the German economy, that may well stoke up more debate about some degree of fiscal expansion, which I think is both necessary and notable. And so I think in that context, if we are going to see moves down to sort of low 109s, I think that would actually provide some levels to look at some strategic long positions in terms of euro dollar rather than necessarily buying into the recent weakness.
Jeremy, great to catch up with you. Jeremy Stretch there, CIBC head of FX strategy.
One thing I find interesting, I hadn't realized this, John, that the euro is the weakest versus the dollar since October and has been steadily weakening. Again, talking about these trends heading into the year, people thought that euro would outperform, that emerging markets would outperform, and the dollar would weaken. Again, all of them getting turned on their heads.
Early 18, 125. Late 16, early 17, you're low on euro dollar, 103.41, which is why I ask about the risk reward. Just how much downside is left on that currency pair if things really start to get bad? The lows of the last 5 years, 103.41. A question we can ask some guests through the next hour and through the next couple of weeks as well. So in the markets, equity futures are lower by around about 11 points on the S&P 500. The jobs report around about 28 minutes away. And your news worldwide, it comes now from Bloomberg's Michael Barr. Good morning, Michael.
Good morning, John. Lisa, Tom. All of the Iowa caucus numbers are finally in. Pete Buttigieg finished ahead by 0.1% ahead of Bernie Sanders. Democratic National Committee Chairman Tom Perez told MSNBC's Rachel Maddow show the technical glitches for the delayed returns were unacceptable.
What happened in Iowa was unacceptable, and the party chair has acknowledged that. He's apologized for that, and we've worked together over the last few days to fix the challenges.
Now, the 7 top Democratic presidential candidates debate tonight in New Hampshire. Last night, debate participants spoke at a CNN town hall event. Senator Amy Klobuchar says she would help close the political divide and bring the country together.
Courage is not just standing in the opposite corners of a boxing ring throwing punches. Courage is whether or not you're willing to stand next to someone you don't always agree with for the betterment of this country.
Bloomberg will carry tonight's debate live starting at 8 p.m. Wall Street time, followed by a special edition of Bloomberg Sound On with Kevin Cirilli. Meanwhile, a new poll shows Pete Buttigieg catching Bernie Sanders in New Hampshire. According to a Boston Globe, WBZ-TV Suffolk University poll, Sanders has 24%, while Buttigieg is a close second with 23%. Senator Elizabeth Warren is third at 13%, while Joe Biden is fourth with 11%. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thank you very much, sir. Let's get you your Friday morning price action, shall we? Equity futures are lower by 10 points. On the week, though, up big time, heading for the biggest weekly gain on the S&P 500 going back to June of last year. We declined this morning. We're down by a third of 1%. In the bond market, Treasuries firmer, yields lower by 3 basis points on a 10-year to 161, on a 2-year note to 1.427%. From New York City this morning, a good morning. The payrolls report 16 minutes away. We'll bring it to you live right here on Bloomberg Radio.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Let's get this right, sir. You didn't see 3 men dressed as clowns take off in a van with a Renaissance painting because you were distracted by, and I quote, a sporty red compact SUV with a bold mesh grille, a sculpted bonnet with sweeping roofline on diamond-cut alloys.
And beautiful rear haunches.
So, you saw a Jaguar E-Pace. But what about the clowns?
What clowns?
Jaguar E-Pace, designed to steal attention. Search Jaguar E-Pace.
I spy with my little eye something beginning with B.
Bike.
Nope. Banana tree.
Oh, of course. We must have missed it. Although you might not be able to see it, your small actions can have a real impact with Shell. Drive carbon neutral by filling up and using Shell Go Plus today. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
For up to 50% off selected floors and beds. For first-class fitting. For kicking your heels off. For overexcited kids. And pets. For thrills and spills. For a special welcome home. For up to an additional £250 off your total flooring order. Carpet Right for life. Terms and conditions apply.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
1.61%. Shanghai rose 0.3% overnight, while European markets are also moving lower, led by losses in the UK and Germany. Back in the U.S. on the economic front, those job numbers at 8:30 change in non-farm payrolls estimate 165,000, and at 10 o'clock, wholesale inventories. After the bell last night, Uber said it plans to report a profit later this year. Shares are up 7% in the pre-market. And regarding earnings this morning, Canada Goose is down 8% pre-market after its numbers. In deal news, Fidelity National to acquire FGL Holdings for $2.7 billion, and eBay is down 6% pre-market after ICE said it won't explore options for the company. Wrapping things up, Twitter was raised to positive at Susquehanna, and Ford was downgraded at both DZ Bank as well as Credit Suisse. Live from the First Breaking News Desk, I'm Bill Maloney. Karen?
All right, Bill, thank you. And to hear live breaking news of your Bloomberg-type squawk on your terminal, SQUAWK. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. Again, futures at 9 here. Make it 10 minutes from the jobs report. And then Bloomberg Interactive Broker Studios, we say good morning to all of you. Lisa Abramowitz, John Farrow. I'm Tom Keene. Right now, and this is always a joy, a quick visit with James Glassman. He is with J.P. Morgan, does exceptionally acute work on the American labor economy. James, let me cut to the joy of having you every 30 days. What's changed in the last 30 days?
Mostly fear, but it's all fear that we sort of think might pass shortly. So there's not a lot of, the virus issue. The Boeing issues, I actually think we'll feel more of a headwind from the Boeing issues, but I don't think it's going to show up in the job market quite as much because, as you saw from Boeing, they're not laying people off. They want to keep people on the job to get ready to go when the plane is recertified. So a lot has changed. The equity market's kind of back to where we started the year, right? But we've gone through a few scares.
Yeah. What's the correlation, Jim Glassman, of a bang-up ADP report, a bang-up job claims, weekly claims report? How does that correlate into what's going to happen in 9 minutes?
I don't know. When you get outliers like ADP, we're just all kind of skeptical. There's enough. The correlation's not that great. There are many times when you've had opposite moves in the two. So, the jobless claims trend is telling you it's pretty steady, but that doesn't necessarily mean the monthly payroll number is going to be that great. So I think people think there's slight upside risk to our moderate forecast, but I think most people are skeptical of what they saw with ADP.
Jim, one reason why I love speaking with you is because you travel the country in your VW bug, trying to understand the job market on the ground. Where are you today?
Portland, heading to Eugene.
What are you seeing as you travel the country?
Well, West Coast is like New York. Really was part of the economy that sprang back to life first, and the tech sector out here is just booming. And Portland is kind of in the middle of the tech boom between San Francisco and Seattle, but. What you notice is that when things are really frenzied, it starts getting congested and costly. And the big worries are just that sort of tends to slow you down a little bit. So you hear a lot of talk about people who are thinking about, migrating to other areas, Idaho, Utah, Denver. Yeah. And, I think there's sort of an organic rebalancing going on. As long as the economy stays here at this level.
Okay,
but I hear the same story, by the way. Everyone claims it's just really tough to find people.
Jim, let me go to your academics on this. This is important, folks. I was out in Portland a while back, and it's a boom economy, da-da-da-da-da. And I was stuck in a traffic jam south of Portland, Oregon, that would have done Houston or Washington, D.C. credit. Can these smaller cities that are booming in this great American economy, can they build the infrastructure fast enough for everybody to move to them?
Good question.
No, I think we're always, everywhere you go, you get the feeling we're always a couple decades behind the need. And part of the problem is we leave this job up to the public sector to do infrastructure investment. And if we did infrastructure investment based on the return on the investment, we probably would have much more infrastructure investment going on than what happens. Right now, it's all bogged down in the politics of Washington and the local, state communities. So I think we're all frustrated. And
Jim,
it's just really tough to keep up with the news.
I want to talk about CapEx as well. Lisa brought it up on the program a couple of hours ago, and I think it's an important question. Do businesses that you speak to have the confidence to make investments this year?
I think right now everybody's in a bit of a wait-and-see mode because you know we're heading for some big disruptions here for at least for the next several months. And some people worry about the politics. I don't hear too much of that in the equity market. But people generally are optimistic about their own business. And I always hear a different story from people when they're talking about their own business than the caution I hear about the national economy. So it's not translated into an investment boom, but I think people are generally not buying the idea that we have to think about recession.
How long?
And I think that was the case last year too, by the way.
How long can the lack of capital expenditure continue without bleeding into the job market and actually creating a slower pace of job gains?
Well, I think we're going to get a slower pace of job gains anyway, just because when unemployment's so low, and there's still people out there that could come back into the market, but the demographics have changed dramatically in the U.S. And I think, CapEx takes a long time to get put in place anyway. And I think it's really more of an issue for how do you think about the next 2 or 3 or 5 years. But I think people take their cue from where they see the market opportunities. And right now, our economy is slowing down. So are the advanced economies elsewhere. And so there's not a compelling reason to be in the middle of an investment boom.
Now, Jim Glasser with us today, calling from a phone booth in Sweet Home, Oregon. This is 1 hour, 42 minutes, 109 miles directly south of Portland, down 205 on the Portland to Eugene, Oregon border. I've never been to the coast of Oregon. When I was out there last time, we just didn't have the time. Have you seen it, John?
I haven't done it yet, no.
It's supposed to be just stunning.
Which piano bar were you in instead?
I went to cigar bars. Portland, Portland is all this,
What a way to see the world.
No, Portland is all this coffee and stuff. They got the greatest set of cigar bars you'd ever see in America.
I didn't know that.
I didn't know that either.
Yeah, it was really good.
Cuban
cigars. Jim Glassman. Jobs Day, 4 minutes away. John, what do you think? Final thoughts here.
Well, let's get the estimates for our audience, shall we? Median estimate 165, previous read 145, unemployment, multi-decade lows. 3.5% is your median estimate, exactly where it was the month before. And the all-important average hourly earnings year on year, 3.0%. That's your estimate, expected to tick higher, just a little bit higher, Tom, from 2.9%.
Dollar's stronger today as well. We got to make note of that. Euro 109.68. Weaker euro, one of our themes as well. Please stay with us. We'll go beneath the headline numbers. This
JD Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time. We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the JD Power 2019 Advisor Satisfaction Survey. They named us #1 in client support, #1 in firm leadership, #1 in operational support, #1 in compensation, #1 in professional development support, and #1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA/SIPC, a registered investment advisor. For 2019 JD Power Award information, visit jdpower.com/awards.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities.
What are we doing to develop that? What will happen to it in the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that so in 10 years we're actually ready to take on those challenges when we have our first development in the water? NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Okay, Sergey, screen 4. What are we watching?
It's a surprise.
What? Where are we? Oh, who's this woman? Is this a musical?
What is this vision I see in front of me?
Could this be my moment? It's happened finally.
Sergey, we both know you don't have the vocal range for this. Enjoy endless adventures with 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases Tuesdays or Wednesdays. Participating cinemas, 2 standard tickets only. Cheapest ticket free. T's and C's apply.
At Ring, we've reinvented the doorbell. So no matter where you are or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio with a wow payrolls report. Here's Vinny Dow Judice.
225,000 new jobs added in January, John. 225,000, topping forecast. The prior month revised a bit higher. The unemployment rate, though, nudged up to 3.6% from 3.5%. The unemployment rate and the payroll data don't normally move in lockstep. Average hourly earnings up 0.2% in January, below forecast, but higher than the prior month. Again, 225,000 non-farm jobs added in January. The prior month revised higher. Unemployment rate 3.6%. Average hourly earnings up 0.2%. And so it goes. I'm Vinny Dow Judice, Bloomberg Radio. Let's go back to New York.
Hey, Vinny, that's a big one. Vinny Dow Judice there with a payrolls report. Here's your market action. Taking in that payrolls report, the dollar a little bit stronger, firmer now by 0.1%. Futures with a lift, erasing the morning's losses, now down by just 2 points. And treasuries had a bid. They give some of that bid up now. Yields down just a single basis point to 163. If you want the key to the higher unemployment rate, higher labour force participation, Tom. Just a lift there, but the headline number, an absolute blowout.
Yeah, this is important, and because of Jeff Rosenberg, you can bring him in, John, but I had to do this with an HP12C because that's the only way Jeff Rosenberg would come on. 3 months moving average, because the key here is the revision didn't occur. It was 200 whatever on top of no revision. So it's a 209,000 90-day moving average.
A very subtle revision. Just a
stunning.
very subtle one. 147 from 145 in the previous month, but 225, Lisa. It's a big one.
It's a big one, and that's why I'm really surprised we're not seeing more of a reaction in markets. Right now, you saw an initial pop in two-year yields, now back down to where almost near where it was before. To me, what is that saying about the market? That basically a surprise can only come on the downside for the Federal Reserve and otherwise steady as she goes.
Sure, I would agree with that. Also, we haven't seen the post-China shock to some of this data, but so far so good. All data points pointing to a really durable US labour market. Jeff Rosenberg joins us now, Senior Portfolio Manager at BlackRock's Systematic Fixed Income team. Jeff, fantastic to have you with us to get that first reaction to the payrolls reports. Your early thoughts, please.
Yeah, so I think you're seeing a little bit of a weather effect in this data. Construction was up 44,000, very strong. That may be taking down some of the headline market reaction because people are looking through that big 225. There was some weather, we had warmer weather in January. This was kind of expected. It's coming through. You're getting a big pop in educational health services. You're getting a big pop in transportation. And retail wasn't as weak as it possibly could have been. It's still weak. It's down 8. But I think that's where when you look through, it's a little bit of weather effect. Taking away from, kind of the inside baseball, it's just another strong payroll report, and it continues the positive news. The wage number is good. We're back up to the cycle high on a year-over-year basis, back to 3.1%. That continues to be, the story here, supportive of consumption. Not a big surprise. Obviously, the headline's a little bit surprised, but weather influenced.
John, the 1-year moving average, 12-month, this is like a Kudlow thing, is 174,000. And we'll let Jeff tell us that's so far above the demographic guesstimate that we've heard 5 years ago, 10 years ago, 15 years ago. That's it's an interesting statistic.
Tom, I moved over here 4 years ago, and I remember looking at the labour market report, and someone said to me, you've got to get ready for it to slow down. We can't keep doing this thing in and around 200,000. We'll get to full employment, we'll decelerate, but things will still be okay. But don't expect 200,000 every month. Jeff, here we are, 225, 4 years later. What's your read on that?
Yeah, this is the legacy of running the economy hot, running the labor market hot. You mentioned it earlier, Jonathan. You're seeing the increase in the labor force participation rate a little bit. You're pulling more people into this labor market, and we're seeing that there's more capacity. Wages have been increasing, but they're not increasing at a rate that says this labor market is overly tight. It is a tight labor market, and you're getting the wage acceleration, but not overly so. And certainly for the market, the wage inflation story has been a positive because it supports consumption and it supports a broadening of consumption. Certainly the distribution of wage gains has shifted from the earlier days when it was all the top end. Now it's the bottom end that is seeing the faster gains. That's broadening your base of consumption. But there hasn't been a pass-through to broad-based inflation concerns. That is a very positive outlook for the markets because you're getting the broadening of consumption and the support for growth without an inflationary consequence. It's a very good picture for the markets.
Jeff, there's a question about the participation rate and the underestimation of just how much slack there was, how many people who are not in the labor market. Where are these extra individuals coming from who are entering the market month after month?
Well, you've really seen it, and when you break down the declines in the unemployment rate by category, what you've seen is the beginning of the recovery going back 10 years ago. It's your highest educated workforce. You go 10 years later, and the gains are coming from the bottom end of the workforce, your lower educated workforce, your lower compensated workforce, but they're seeing the gains in terms of payroll. They're seeing the gains in terms of participation. They're seeing the gains in terms of the largest declines in their unemployment rates. So this economy is finding more opportunities for a greater proportion of people who had in the past been not part of the workforce, and that's a really good outcome for the economy. Certainly that's a big political story, but from the economic story, it's about broadening the base of consumption.
Jeff, let's spend a little bit more time on the economics, and then we'll turn to the market and what you're looking for at the moment. But just one more on the economics from me. What's your definition of full employment, and are we meeting it right now?
We are meeting the definition. No one knows what that definition of full employment is. The measurement of it is what's the pace of change in wages, right? If you're competing for a scarcer amount of labor, then labor regains its pricing power. And we've seen that, but it hasn't accelerated because we have other offsets in the form of labor substitution. When you can't find somebody to do the job, you find a capital, a technology solution to do that. Certainly there's a myriad of examples of this across the retail, restaurant industries, employing that, but that is where we're at, and you see it certainly in the NFIB, the small business surveys. The number one problem they have is finding workers, finding qualified workers.
But that's where I wanted to go. We did this on the microeconomics of Chicago's Jeff Curry, now at Goldman Sachs. Jeff Rosenberg, let's do the Carnegie Mellon microeconomics right now. That's an illogical statement. If you can't find workers at the margin, you raise the wage. What are we observing when that's tried?
Well, you're observing the choice between raising wages, and we have to broaden that because we know it's not just in the wage data. It's in the wage and it's in non-wage compensation.
Sure, of course.
So you raise the wages, you raise the benefits, you raise the flexible time off, you raise the working conditions. Yeah,
Farrell has that. Yeah,
all in competition for workers. You have industries in the U.S. like the furniture manufacturing industry where they're going in and they're investing in the local population to try to boost education, fund education to get workers into their industries. So that's the kind of things that is characteristic of a tight labor market. When you run out of that room, then you have to look for capital substitution and you look for technology solutions to offset the tight labor market.
Well, I'm just looking at labor share, which was frankly a sub-theme at Davos. Let's bring it over to the fixed income market now, Jeff Rosenberg. Well, we've had different opinions this week on Bloomberg surveillance on the trek of the 10-year yield. What is your call right now on 10-year yield?
Well, we've had the big shock in terms of the recession shock, the coronavirus. It was worth 30 to 40 basis points on the 10-year. What's really notable, and I'm sure you guys have commented on this, you see the really quick snapback in terms of the equity market, but you don't see the snapback in terms of yields. And there's some really good reasons for why that is, and that is the value of fixed income in a portfolio context. People own stocks for the upside. So they want to get right back into the stocks when the fear of the downside, the spread, the recessionary impact potential of coronavirus dissipates, then it's everybody back in the pool. But in fixed income, you're not owning it for the upside. You're owning it for the protection. And you look at the returns, 2% up on the ag index in January. It validates and reminds us of the value of fixed income is for the diversification. And so when you go into it, when the concern eases, you're not as quick to run out of it. And that's why I think, could we see modestly higher interest rates here, 20 basis points, maybe by the end of the year get back to 2%? Perhaps. But it is not a rising interest rate environment. The Fed's on pause. We have no inflation. Could you ease a little bit off of the term premium flattening from the coronavirus? I think that's the case. But the years of fears of rising rates driving people out of duration and out of core fixed income, it's probably behind us, and I think most people have learned that lesson.
And Jeff, from a structural standpoint, that explains why people have invested over the longer term in bonds. However, I'm looking at the trading action today. 2-year yields now lower from where they were ahead of this jobs report, and I'm struggling to understand the argument, the justification for what is a blockbuster headline number and pretty good, solid underneath data here. What would justify a feeling that this absolutely would signify that the Fed is going to cut rates at least once by the end of this year?
Well, I don't think this is I wouldn't take the reaction to today being about the Fed cutting interest rates. I think the accumulation of the coronavirus getting us down to these levels of yield, that's what that is about. I think the reaction to the report today is people are looking through the weather report, the weather influence. If you net out the weather influence, it's not as strong of a report relative to what might have been priced in, and that's what you have in terms of the rally.
Jeff Rosenberg, brilliant. Thank you so much. Nice summary there of the economics and, of course, folding into the real yield market as well. John, you were taking notes over there? You got that ready for the real yield this afternoon?
I'm getting my notes ready. Just a fantastic number.
1.60%. My takeoff, and I get the weather adjustment and that. You go to moving averages, and it's really not all that bad.
But if you take a look at the U6, or the underemployment rate, it actually rose to 6.9% from 6.7%, indicating that people who want full-time jobs and only have part-time jobs aren't getting them. Some questions underlying this data.
Futures at negative 13. Now with the news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. After all the confusion in the Iowa caucus, the Democratic candidates are now turning their focus to New Hampshire's debate tonight. Bloomberg will carry it live starting at 8 p.m. Wall Street time, followed by a special edition of Bloomberg Sound On with Kevin Cirilli. Meanwhile, Pete Buttigieg is catching Bernie Sanders in New Hampshire. According to a Boston Globe WBZ TV Suffolk University poll, Sanders has 24%, while Buttigieg is a close second with 23%. Elizabeth Warren third at 13%, Joe Biden fourth with 11%. Former Republican Congressman Joe Walsh is ending his uphill challenge against Donald Trump for the 2020 Republican nomination. The former Tea Party member says a moderate Democrat is more likely to beat Trump, but that he'd accept anyone over Donald Trump, whom he sees as an existential threat to the Constitution and the country.
Most of the Republicans I spoke for are looking for a more moderate, reasonable Democrat choice. The name Joe Biden kept coming up. The name Amy Klobuchar kept coming up. But we could get to a point, again, this is such a unique moment in time where we are going to be forced to support any Democrat because he's better than this.
Nearly 150,000 homes and businesses in the southeastern United States have been left without power following a powerful storm that left at least 4 people dead. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you very much, sir. Let's get you some price action, shall we? Blowout jobs report, payrolls in at 225, your median estimate 165. The lift to equity futures does not last long. Equity futures back down again with negative 15 points on the S&P 500, off by 0.4% after a big week of gains on the S&P. In the bond market, the bid is back. Yields are lower by 4 basis points on a 10-year to 1.599%. From New York this morning, good morning. This is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. What type of commercial real estate is best to invest in right now?
We're focused in on, essentially, for lack of a better description, technology-related real estate.
That's Burl East. He's CEO of American Assets and Portfolio Manager of the Altegris AACA.
Digital real estate, fiber backhaul, data centers, small cells, towers, all that kind of stuff.
East says that's after looking for what his company considers are surefire investments.
We tend to focus on stuff that we think is monopolistic in structure. So we're looking for companies that have secular demand drivers, which are not cyclical, where the landlord has a piece of real estate that, practically speaking, you must have and you can't leave. And so, therefore, as landlord, I can essentially maintain high occupancy and drive rent.
And East says that part of tech real estate will remain in high demand globally as the data center industry continues to grow. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Rich is just a really good guy. The term good egg isn't enough to describe him. He's also certified organic and free range. Rich puts the cap back on everything. The toothpaste, the olive oil, the shampoo, everything. He lets his 10-year-old nephew beat him at virtual tennis, even though he can straight up slay his 10-year-old nephew in virtual tennis. When the toilet paper is running low, Rich replaces the roll on the actual holder, not just on the back of the toilet. Rich is texting and driving. Rich, no. What are you doing, Rich? I was just telling everyone how great you are. Texting and driving good people look bad. Visit StopTextStopWrecks.org. A public service announcement brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Connecting.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
5, he's in! What a run! Touchdown, Kansas City!
Congratulations to the Kansas City Chiefs on winning their first Super Bowl in 50 years and second in franchise history.
50, Watkins, 10, chase to the 5, into the end zone, touchdown! That may be all she wrote!
While the NFL's 100th season may be over, football never stops on TuneIn. Search NFL Podcast to stay current with all the off-season wheeling and dealing. And get ready for the 2020 NFL Draft in April.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown!
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Down 1.4% or 73 cents at $50.22 a barrel. COMEX gold is up 0.2% or $3 to $15.73.30 an ounce. The euro 1.0960 against the dollar. British pound 1.2934 and the yen is at 109.75. And Ford naming strategy chief Jim Farley as chief operating officer. That according to Dow Jones. That's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. Greatly appreciate that. Lisa Bramowitz and Tom King, we welcome all of you across the nation. Sirius XM Channel 119 in Boston, in New York, in Washington, in San Francisco, and particularly all of you in continental Europe into the afternoon. Right now, Elisa Martinuzzi is with us. She's with Bloomberg Opinion. She is encyclopedic on the fabric and culture of European banks. And Lisa, with Credit Suisse, I don't want to look at the immediate details and the gossip and all that. I just want to look forward. What is the imperative for the cantons of Switzerland to keep UBS and Credit Suisse independent and fully Swiss? Are they even possibly merger candidates?
Funny you should ask. I think there are some who argue that would make very good sense. Do you need two large wealth managers? I think what this case has shown though is that there have been some undertones of the management needing to be Swiss, and today the chairman pointed to the deterioration of the reputation of the bank, particularly in Switzerland, as being something that ultimately led to the CEO change.
With this, Lisa, and I know Lisa Bramowitz has a lot of questions for Elise Martinuzzi as well. I look at this and I say to myself, is there an Anglo-Saxon unhappiness over shareholder performance? I look at the charts and they're unacceptable. Or is that not part of the Swiss dialect of what you do in banking? Do shareholders really matter to these people?
Yeah, as you rightly point out, the shares are, don't paint a pretty picture. This restructuring, which is finally bearing fruit, the restructuring that TM undertook to tilt the bank more towards wealth management and back from volatile trading, hasn't really resulted yet in the shareholder returns and performance that you would have been expecting by now. That said, I think in the last 6 months, this drama and incessant headlines have not helped.
I believe this is the first time in 20 years that there has been a Swiss chief executive officer of Credit Suisse.
Well said. I didn't know
and
that.
There is a question, can Credit Suisse be considered a global bank? I mean, given the fact they want that Swiss culture, they have it, and they're retrenching.
I think the sense at the moment is that, the successor, Thomas Gottstein, will very much pursue and continue to embody the strategy that Tidjane had put in place. Bear in mind, he'd been part of that management team when the strategy was put together, and he's been running the Swiss Universal Unit, which is basically a mini Credit Suisse within Switzerland, exposed to investment banking and wealth. So the sense at the moment is the strategy won't take a turn. Of course, on the investment banking side, they're a lot smaller than they were globally before TM took over. But in wealth, they're clearly pushing quite aggressively in Asia and other emerging markets.
I'm just wondering that because there has been this feeling that particularly European banks pressured with negative rates has made it even more challenging to expand internationally. And I'm wondering, is this going to sort of precede an ongoing shift that way, both among Swiss banks and German banks and even perhaps Japanese banks, I'm thinking, with a similar kind of trend?
Well, if you look at the rest of Europe, if you look at the Eurozone, for example, there is a growing sense that Europe's banks need to sort of be stronger and bigger to compete on the global stage. And you have that being part of the reason that Europe is considering pushing ahead with deeper and banking union, completing the banking union project, which would help potentially foster consolidation. So I think at the moment I would be hesitant to jump to the conclusion that we'll see a greater retrenchment.
Never boring. Elise Martinuzzi, thank you so much. Writing for Bloomberg Opinion on so much of continental and United Kingdom banking, and I'm sure there will be important essays out on this. I think it's really instructive, and I'll be honest, I don't think I've ever bought anything, Lisa, in Zurich. It's so expensive.
It is incredibly expensive.
This is bow tie I've got on one of my antique Hermes ties today. This tie would be $50 US dollars more in Zurich.
Yeah, how much would an extra gin be?
There are $3-4 more. Seriously, like a bowl of soup is anywhere you go. A bowl of soup is $14-15. There's a McDonald's sort of between our office and the fancy street, and I go in there and take photographs. I'll be in there just to prove to people here at Bloomberg
to John Farrow that you've actually gone to McDonald's.
And seriously, a number 2 value meal at McDonald's in Zurich is $14. I mean, without kidding.
Yeah,
and the whole thing there. But you go down the street, and there's just such a sense of the other banks hidden away. And there's UBS, pretty modest and all that. And then on the right side, as you walk to the lake, and Paul Sweeney, you know this, there's just Credit Suisse. Yep. And it's changed, Paul, from when we were in our ute.
Yeah, exactly. And, I worked at Credit Suisse for 5 years, and it's interesting. I'm just not sure the strategy there. They were so strong in private wealth management globally, and then they got out of the business in the U.S. about 5 years ago. When Morgan Stanley was doubling down on that, it just kind of was really surprising to me. Now they're thinking about getting back in. So I think it's just been a strange play there.
You see it. I did this chart this morning. I didn't know, Lisa, what the chart was going to look like. It's Deutsche Bank and UBS and Credit Suisse normalized back to 2007. And there's some interesting stories in the chart. And one of them, and I'll say this, UBS outperforming Credit Suisse modestly. Yeah. But in Zurich, I think that modestly is a big deal.
It is a big deal. Right now, we're seeing Credit Suisse shares actually pare back some of the losses earlier in Switzerland. Now, barely down about a half percentage point after the exit.
Lisa, do you think Tom has ever had a McDonald's number 2 meal?
He's gone in and taken a picture of himself looking at the number 2 meal.
I can't picture it myself.
No, I'm looking right now at markets because this comes after the blowout headline number from the jobs report. We're seeing actually NASDAQ futures heading toward their lows of the session, and we're seeing Treasury yields tick lower, bond price higher. Jeff Rosenberg making a really salient point of BlackRock, saying basically markets were expecting this. They backed in the weather data. They backed in the potential influence, Tom.
And oil, $50.25. Soon maybe a 49 print on oil. Stay with us worldwide. This is
You can find it on LinkedIn. First jobs, flexible jobs. Keep me out the cold jobs. Advertising jobs, accounting jobs, HR, PR, even ER jobs. East London jobs, West London jobs, extra hour in bed jobs. Startup jobs, late start jobs, get home in the daylight jobs. Banking jobs, building jobs, flexible working on a Friday jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
Dear Cass, sweet pea, not sure what I did to deserve a love like yours. I'm so lucky. You make me want to be a better man. Mind, body, and soul.
Pork balls, fried rice, kung pao chicken, spring rolls extra fried, order 55.
Yeah, here. Happy Valentine's, my love, forever, your little boop. This Valentine's Day, heartfelt can happen anywhere with moonpig.com. Get £10 off when you send someone special 24 roses. Download the app today. Exclusions apply.
As le boss, I expect only the best for my office. Air conditioning, super comfortable seating, digital radio, and rear parking sensors. From dealing with deliveries to balancing the books, my new Citroën van, my office on the move. Award-winning Citroën vans. Like you, they do it all. With £500 off during the February van event. Citroën. £500 discount inclusive of VAT on qualifying relay, dispatch and Berlingo vans ordered from 1st to 29th of February and registered by the 31st of March. Business users only. Full T's and C's at citroen.co.uk.
5 is in! What a run! Touchdown, Kansas City!
Congratulations to the Kansas City Chiefs on winning their first Super Bowl in 50 years and second in franchise history.
50, Watkins 10, chase to the 5, into the end zone, touchdown! That may be all she wrote!
While the NFL's 100th season may be over, football never stops on TuneIn. Search NFL Podcast to stay current with all the off-season wheeling and dealing. And get ready for the 2020 NFL Draft in April.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The Federal Reserve's independence is crucial.
Central banks should be prepared and not presumptuous.
Finance.
In order to grow, you need to innovate.
Global money doesn't like uncertainty.
Investment.
I think the issue in the market is really more about the possibility of a recession in the next couple of years.
I do think we need to get back to where we have always been, the American dream.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. Jobs Day, big number. No revision, almost flat revision, at least to a 3-month moving average, well over 200,000. 12 months moving average, 174,000. That is a job creation machine. Lawrence Kudlow in this hour with our John Farrell. Thrilled that we'll do that. That'll be in about 45 minutes as well. Futures give away a little. Paul, I guess the weight to the tape, et cetera, here was a little bit of weather inducement. Jeff Rosenberg of BlackRock really playing that up.
Yeah, it's interesting that, the jobs number, as you were just mentioning, Tom, very strong. And it just goes to that, the issue of this U.S. economy is being driven by the consumer.
Yeah.
Consumer remains strong. Yes, manufacturing is a little, questionable, as is business investment, but the consumer continues to be strong, driven by job gains.
Yeah, John Farrell almost happy today. As happy as
Really?
I've seen him. He took those 8,000 shares of Uber.
Yep.
And he would talk about underwater, and he's sort of like on the edge of, above water. David Wilson here with the Uber report. How big a surprise was this, David?
Well, big enough that the shares are up 6% in early trading, and that Uber's among the most active stocks. So they've got that going for them. The ride-hailing company said its first ever quarterly profit will happen this year rather than next year, as forecast previously. Now, Uber's fourth quarter results showed a narrower loss and higher revenue than analysts expected in a Bloomberg survey. You've also got Lyft up 3.5%, of course, Uber's rival. Those results are due Tuesday. Now we turn to the coronavirus. Royal Caribbean down 2.5%. Chinese passengers on one of the cruise line ships have shown signs of coronavirus. According to the website NJ.com and other reports, the ship is docked in Bayonne, New Jersey.
You got a whole list of these today. I mean, you've got a list of
Yeah, I sure do, Tom. Just look at the cruise stocks. Carnival's down 2%. Norwegian's down 2%. Then we turn to Macau. Wynn Resorts down 3%. They own casinos in that Chinese city, and they say they're losing about $2.5 million a day after the mainland government ordered all the casinos closed. Wynn had an unexpected loss for the fourth quarter, and Las Vegas Sands, by the way, also in Macau, down 2%. Mm-hmm. Fiat Chrysler lower by 2.5%. The automaker down on concern that the outbreak of coronavirus may disrupt supplies. Fiat Chrysler said yesterday it may have to temporarily close a European plant within the next 2 to 4 weeks if the situation worsens. On the deal front, we've got eBay down 5.5%. Intercontinental Exchange ended its pursuit of the online marketplace just days after the potential deal became public. Now, ICE owns the New York Stock Exchange, among other markets, and its shares are up 4%. And the most active stock at the moment is a company called FGL Holdings. It's up 1.5%. It's a provider of annuities. Fidelity National Financial agreed to buy FGL, and the deal valued at about $2.7 billion.
Two more.
Okay. AbbVie up 3%. The drug maker's profit forecast for this year was higher than estimates. Now, AbbVie's outlook doesn't yet reflect the pending takeover of Allergan, which is due for completion this quarter. Let me just give you a quick overview of earnings. T-Mobile US up 1% after their results. Activision Blizzard and video games up 2%. One of their rivals, though, Take-Two Interactive, down 9.5%. All right, I'll leave you with Viacom CBS, up 2%. People familiar with the matter said the broadcaster is working to expand its streaming service.
There you go.
They already have CBS All Access, but they're talking about, according to our reporting, adding in programs from Viacom's Paramount Pictures and cable networks.
Nice. Can you see? I can see Margaret Brennan at Paramount Pictures.
Oh, sure.
I can see the starlet of Paramount Pictures as well.
On the lot.
David Wilson, thank you so much. And, of course, Margaret Brennan really doing well. It Face the Nation with a deeper conversation. Of course, see it Sunday morning on the CBS television networks. And, of course, you can hear it on Bloomberg Radio Sunday afternoon. Margaret, there you were last week. To the gentleman from South Bend, before you get to governing, though, you've got to win the horse race. So how do you finish and how do you define success in Iowa? How about a vote you can count, Margaret?
Fair point. I don't think anyone could have foreseen where we'd end up, that we still don't have confidence with the AP saying they don't even know who won out in Iowa.
So what happens? I mean, do they recount it? Do we do New Hampshire and, as the jokes are, go back and redo Iowa? What's the latest from CBS reporting?
Right. Well, you heard Mayor Pete declare victory, and certainly when it looks like the number of delegates from the numbers we've seen, he is ahead of Bernie Sanders on popularity and energy, though Bernie really keeping the momentum there. So the one thing that does seem clear at this point is that Joe Biden didn't finish in that top spot, and that, as he said, was a gut punch for him. So there's a lot riding on tonight's debate in Iowa and on the primary next week.
Take it to the two events. What will be the prism for you on Face the Nation, of course, after this debate tonight? But do you focus on Vice President Biden? Is there another theme we're missing?
Well, we will watch, how the candidates on that stage tonight try to build some difference between them. I mean, I think it's fascinating that the youngest person in the race is viewed as the person in Iowa who pulled the moderates towards supporting him, while the oldest person in the race is seen as the future. 78-year-old Bernie Sanders, arguing that it needs to be a far more progressive party than is defined. How on that stage will Joe Biden try to come up from behind in New Hampshire, where it's usually sort of the hometown person, Bernie Sanders from nearby Vermont or Elizabeth Warren from nearby Massachusetts, who has a bit of an advantage. We'll look at a bit of that horse race, but we'll also look at what was the relaunch of the president's campaign. That State of the Union address sounded a lot like a campaign 2020 speech for President Trump.
So, Margaret, within the Beltway, what is the feeling about the postmortem of the entire impeachment process? How does it play out for both sides of the aisle going forward, do you think?
Oh, there's such exhaustion in the district over this, but there is also the question of what happens now. What is the precedent being set for presidential behavior? What does this mean in terms of what we heard from the president yesterday, which was far from contrition, far from what Susan Collins and others had said they thought was sort of a contrite president who might have learned his lesson. You didn't hear that. What does 4 more years of Trump mean in that context? We'll talk to Senator Lindsey Graham, who's also helping to launch some of these taxpayer-funded investigations the president wants into Joe Biden. If you think the storyline is going away after impeachment, you'll be disappointed, because this will be with us through the 2020 race. Accusations about corruption on both sides, even though the president wasn't able to get his wish of having a bipartisan acquittal, he at least did get 2/3 of the Senate standing with him rather than voting to oust him from office.
So, Margaret, what is CBS News looking for tonight at the debate? Is there an opportunity for somebody to break out, maybe?
Joe Biden, surprisingly, as the front runner up to this point, needs to have a win tonight to show that he can be on his toes. He can be quick with a retort and not stumble. That's really kind of the impetus. Pete Buttigieg has to be feeling really good on the heels of a win in Iowa, but he has to broaden his base, broaden his support. And then, you've already got these complaints about the next few debate stages, now that the DNC has changed the benchmark, opening up the possibility Mike Bloomberg could be on that debate stage by the end of the month. You've got Bernie Sanders complaining about that and Elizabeth Warren complaining about that. You got to bet that we'll hear a little bit more about that rhetoric tonight.
Fascinating. Face the Nation on Sunday. Margaret Brennan, thank you so much. And, of course, Margaret Brennan, the CBS television networks, very, very important. You'll see that Sunday morning on CBS. Hear it on Bloomberg Radio. Face the Nation Sunday at 2 p.m. in New York, Washington, and Bloomberg 106.1 Boston Newburyport. Face the Nation this Sunday at 2 on Bloomberg Radio. Also, the New Hampshire primaries, of course, all that coming up, and we'll have really good coverage of that. Bloomberg Radio starting 8 p.m. The night of the New Hampshire debates, and that would, the New Hampshire primary, I should say. And we'll also do that the night of the debate. That is tonight with Kevin Cirilli doing a special sound out, a special edition, of course, sound out as well. Of course, Ms. Brennan mentions Mr. Bloomberg. We should say that Michael Bloomberg is the founder of Bloomberg LP, and of course, this radio and television station as well. It's just extraordinary to me, and I still don't have a grasp on it, to be honest, folks. The mess up in Iowa.
No, I don't.
Let's begin with the idea.
I don't know. First of all, the technology did not work. But can we not go back to the paper ballots or the backup? So.
And I just think the caucus thing is gone.
Yeah.
There's many more candidates now. It's almost parliamentarian now.
Right.
It's almost like in England, not even England, Italy.
Yeah, exactly.
It's more like Italy.
Yeah, exactly. And we don't want to go there.
And we don't want to count bodies once, bodies twice in a room. Just doesn't. Those days are gone.
Exactly. You know, in Chicago, vote early and vote often. I don't think we want that either. So.
Very, very good. It is a Friday, Jobs Day. Futures were at -9, -10. A little weight to the futures. Not much of a change in the bond market, but we do have dollar strength. With that said, let's go to the news in New York City. Here's Michael Barr.
Tom, Paul, thank you very much. As the top 7 Democratic candidates get set to face off on the next debate stage in New Hampshire, Pete Buttigieg and Senator Bernie Sanders are separated by a thin margin after the Iowa caucus. Meanwhile, the new poll shows Buttigieg and Sanders in a close race, according to a new poll with the Boston Globe, WBZ-TV, Suffolk University. Sanders has 24%, while Buttigieg is a close second with 23%. Buttigieg at a CNN town hall last night in New Hampshire says the Senate may have acted as jury in the impeachment trial, but the other jury for this case against President Trump is the American people.
This is 2020. This is an election year. And so the Senate may have been the jury yesterday, but we, the people, are the jury now. And the final verdict on the president and on the Senate is going to be up to us this year.
Former Republican Congressman Joe Walsh is ending his challenge against Donald Trump for the 2020 Republican nomination. Walsh, a former Tea Party member, says a moderate Democrat is more likely to beat Trump, but at this point he feels that any of the current candidates would be better than Trump in the White House.
I would rather have a socialist in the White House than a dictator, than a king, than Donald Trump.
Walsh told CNN it's not a party, it's a cult. He can't be beat in the Republican primary, so there's no reason for me or any candidate really to be in there. The White House is said to be weighing a plan to oust an aide who testified against President Trump in the impeachment inquiry. According to 2 people familiar with the matter, the White House plans to dismiss Army Lieutenant Colonel Alexander Vindman from the National Security Council in what is considered to be a downsizing of the NSC staff. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. Hear from David Wilson on Uber. Paul Sweeney, simply on Uber. Turning point?
Yeah, I think this is really important for the company. They're going to make a profit, the company's saying here, in the fourth quarter of this year, a year ahead of plan. And that's kind of been the issue, not just for Uber, but for Lyft and for some of the other unicorn companies here. You have to show the market a path to profitability. You can't just play the revenue growth story. You have to show a path to profitability. And this new CEO at Uber is really pushing, I think, the levers
like
there.
Normal business practices, just perhaps.
Yeah, exactly. Crazy. Wouldn't you believe it?
It's a modern concept as well. Good morning. Thrilled that Mr. Drucker's listening to us this morning. Futures at -11, Dow futures at -105. Our Uber guru has just walked into the studio. That's a good thing.
He has to rework his model now. He has to get some profitability.
I think they overcharged me. This is Bloomberg. Good morning. Futures -11.
Ring of fire. The ring of fire.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard?
or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to...
I'm Captain Obvious, and every day people book trips on Hotels.com that you will later hate like. A hate like is when you like Becky's picture of another waterfall even though you kind of hate it because she's there and you're on the train next to a mouth breather. Don't hate like Becky's trip. Book your own with Hotels.com. Hotels.com. Be there, do that.
Finding your perfect new home can be tough. So if you keep missing out...
It's time to search at On the Market.
There are thousands of new properties to buy or rent every month at onthemarket.com. 24 hours or more before they're on Rightmove or Zoopla. See them first. Set up a property alert today.
Search onthemarket.com to find your perfect home.
If you're in the market, search onthemarket.com. See onthemarket.com/new and exclusive. Agents specify exclusivity.
At Wix, we'll create your dream kitchen from design to show-off ready and take care of everything. And now, save a third on showroom kitchen units. Book your free design appointment today. Cure your house embarrassment with Wix. For minimum spend, terms and exclusions, see wix.co.uk.
WW Weight Watchers Reimagined have a new customised weight loss programme, MyWW, where no foods are off limit. Just fill out a simple assessment and get matched to a plan that suits you. You love eating carbs, cooking at home or eating out? No problem with this new customised plan. Discover which new MyWW plan can make losing weight easier for you. Join now and get 50% off your first 3 months.
Offer ends 8th of February. Subscription fees and conditions apply. Mainland UK only. See website for details.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are slumping this morning as concern about the economic impact of the coronavirus overshadows data showing a strong U.S. job market. Treasuries are climbing, oil falling. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down about 14 points. Dow futures down 125. NASDAQ futures down 48. The DAX in Germany's down 0.5%. 10-year Treasury up 14.30 seconds, yield 1.59%, and the yield on the 2-year 1.41%. NYMEX crude oil is down 1.2%, down 61 cents at $50.35 a barrel. And COMEX gold is up 0.2% or $3.40 at $15.73.40 an ounce. The euro 1.0954 against the dollar, British pound 1.2931, and the yen 109.75. And that's a Bloomberg Business Flash. Paul and Tom.
That's it, Tom. T-O-M, Karen. Thank you for nailing that one this morning.
He's still here.
Karen Moscow with killer data checks. Nobody does a more complete data check than Miss Moscow worldwide right now. I was just trying to figure out the Uber quote, and should I go like Luxo or Cheapo or Bentley to get up to Montreal to see the Canadians play? You know, just get in an Uber in Manhattan and go. People do that.
Well, yeah, you can.
They go long
I
distance.
think you hop in this surveillance Sikorsky, you'll be there in no time whatsoever.
Is it? Well, yeah, Francine has a Sikorsky this weekend. Seriously, is an Uber and a Lyft cheaper than a taxi cab in New York?
I don't. I tell you, I just play them off one. When I need a ride, I pull up my Uber app and my Lyft app, and whichever's cheaper, and just play the game. But apparently, Uber is moving aggressively towards profitability. They're listening to the market. They had some better than expected results last night. Mandeep Singh covers Uber and all things technology for Bloomberg Intelligence. Mandeep joins us here in our Bloomberg Interactive Broker studio. So, Mandeep, what's the takeaway from the numbers that you saw from Uber last night?
Yeah, so really strong top-line numbers in the ride-sharing segment. And the reason I say that is because of the delta between bookings and revenue growth. Whenever you see revenue growing faster than bookings, that's a clear sign of take rates growing.
And they're taking a bigger slice of each ride.
Yes,
okay.
and they're focusing on the premium category, the airport rides, the Tom Keene type of rides, and it's business, airport. So really, I think that's driving up the ASPs, and the ride-sharing business is at a healthy $10 billion clip with a positive 24% EBITDA margin.
So they make money on the ride share.
They do. Okay. And that's a $10 billion revenue base.
Are they taking the cash flow from the drivers?
I don't think so. Did that
come up in the conference call?
It did not, but look at the business model. Let's contrast ride-sharing and food delivery. In case of ride-sharing, they're paying the drivers 75% of their ride. In case of food delivery, first they have to pay the restaurant, and then they have to pay the driver or the courier. So food delivery inherently is a lower gross margin business. And that's, I think, really important to understand that no matter what they do in food delivery, the margins are never going to be as good as, ride-sharing.
This is so important, folks, in Boston, New York, Washington, nationwide. We could go with Mandy for hours. I'm going to cut to the chase. First of all, you made a ginormous call here. I know. Is he the only one that can do buy, hold, sell? Uber Intelligent.
Yeah.
You nailed this puppy. I want to make that real clear. You were an Uber optimist down in the low 30s and 20s, like nobody else I know. With the success they've had, is it a success like, okay, we're here, or is it going to be like Facebook when they came back, where there's real legs to this?
There are legs to this. I would caveat it by saying that still there are risks when it comes to, AB5, California.
That's where you have to, are they gig or are they employees?
Yeah, and the cost could go up substantially. So I talked about the 24% EBITDA margins. Those could come down a lot if they have to pay the drivers more and they have to cover the expenses. The London ban is another one. If they lose one city, that's about 3 to 4% of their total bookings. So there are risks. But at the same time, they're curtailing the loss-making Eat segment. They pulled out of 2 markets, India and South Korea. So that should help the EBITDA line. And that's what they got to do more on the Eat side.
Is there a chance that they pull out of, would the street want them to pull out of other markets or maybe just get out of the Eats business in general?
No, because when you look at the synergy between ride-sharing and Eats, there is, higher level of engagement for riders who use both services, and there is that bundling aspect.
Okay.
And at the end of the day, Uber is a marketplace, and marketplaces are driven by scale and network effects. So the more offerings you have, that's...
Oh, stop. You're killing me. Network effect. This is a bunch of MBA speak. Come on. Juno went out of business. I think Lyft bought Juno. I can't remember. We're at the minimum at an oligopoly right now, right? Are we beginning to see oligopolistic or indeed almost monopolistic profits?
No, but what they have shown is they have pricing power. So given the fact that they raised prices by 5 to 10%, it didn't have any impact on the ride deceleration, the total number of trips.
Wait a minute. Okay. I'm in a Toyota Camry going out to JFK, and Al from New Jersey's emailing me going, Tom, why is this ride $23.42 more than it was the last time?
Yep.
And the answer is it's a monopoly.
Well, not everywhere. So it may be in certain cities. In the U.S., you have Lyft. When you go to Brazil, you have Didi, which is another big player in global ride-sharing. In China, in Brazil, in Southeast Asia, it's Grab. So I wouldn't call it a monopoly, but at the same time, it's a consolidated market compared to some other, high-growth markets that you come across.
All right, so Mandeep, the new CEO, Dara, I can't pronounce the last name. Thank you. Cutting back on expenses, is he cutting back on growth opportunities potentially? Is he cutting back too much, do you think?
Not really. I think now is the time for them to make the street and the investors believe that they can continue to improve the margins. And the way you're going to do it is by really kind of curtailing the subsidies, as well as certain markets are never going to be profitable. Food delivery is a very fragmented market. There are just too many players.
Why, to Paul's question quickly here, get out of it like Lyft?
Because of the bundling aspect. So you are going to drive, eventually when there are 3 players or 2 players left in food delivery, it will become attractive. They are going to roll out a subscription pass, which you're mentioning of Lyft. So the pass for Uber will be much more attractive because you can do both ride sharing and food delivery and grocery delivery.
Okay. We got to get you back here on a non-Uber day because to me it's just oligopolistic pricing.
Eventually, I think what I'm hearing from Andy is eventually you're going to get there, even in the food delivery business, and then the pricing power story comes in, and you can get your sirloin from Smith & Wolenski's delivered, and it'll be perfect.
Al from New Jersey emailed in on that the other day. He said walk.
Exactly.
Mandeep, thank you so much. It's really, really important. And I'll tell you, folks, this is the value of Bloomberg Intelligence. Mandeep absolutely killed the analysis of Uber when it was tanking in the 20s.
Yeah, and also, we had Mark Mahaney on a few days ago, and this is his top pick for 2020. So some streets starting to warm up to these ride-sharing, Lyft, Uber, these gig companies, the renewed focus on profitability. That's different from when they came public, when they were just talking about revenue growth. Now it is profits. This is Bloomberg.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients, and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us #1 in client support, #1 in firm leadership, #1 in operational support, #1 in compensation, #1 in professional development support, and #1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA SIPC, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/awards.
Finding your perfect new home can be tough. So if you keep missing out,
it's time to search out On the Market.
There are thousands of new properties to buy or rent every month at onthemarket.com. 24 hours or more before they're on Rightmove or Zoopla.
On the Market.
See them first. Set up a property alert today.
Search onthemarket.com to find your perfect home.
If you're in the market, search onthemarket.com. See onthemarket.com/new and exclusive. Agents specify exclusivity.
I am a force for good.
I am a force for courage.
And for calm.
I am a force for safety.
For fairness.
For leadership.
I am a force for the future.
For compassion.
For my community.
I am a police officer.
And I am a force for all.
Be one of the 20,000 new police officers and be a force for all that you believe in. Search Join the Police.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of March 2020. £3,311.25p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Brought Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the opening bell brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. The S&P 500 lower at the open, down 0.4% or 12 points to 3333. Dow Jones Industrial average down 0.5% or 132 points to 29,246. And the Nasdaq's down 0.5% or 46 points at 9524. 10-year Treasury up 16/30 seconds, yield 1.58%. The yield on the 2-year 1.41%. NYMEX crude oil's down 1.2% or 61 cents at $50.36 a barrel. COMEX gold up 1/3% or $5.50 at $15.75.60 an ounce. The euro 1.0959 against the dollar. The yen at 109.65. Tom and Paul.
Thanks so much. Greatly appreciate that. Paul Sweeney and Tom Keene, thrilled you're with us today on a Jobs Day. Right now, we're going to digress. We're going to go to Tiffany Wilding with PIMCO. Thrilled she's in our studios in New York, which is always a good and cool thing. Usually we talk to her. She's having like avocado toast or something.
Overlooking the
that
ocean.
Irish bar in Newport Beach they all go to down the hill. And instead she's here with us today. But I got to cut to the China virus chase, which is PIMCO has a really cautious worldview. I'm saying that with a gracious tendency of a tilt towards caution. What does the China virus do to your analysis? Have you worked through that yet on the great PIMCO macro basis?
Yeah, well, first, thanks for having me. Well, I think first and foremost, the virus obviously is a humanitarian crisis, and we're, our heart goes out to everybody involved. But, we do have to think about the potential economic disruption, what that does to China, as well as the rest of the world. And it's important to know that, China is one of the top manufacturers in the world in terms of value add. So there are, any sort of disruption in their manufacturing sector is going to ripple through into the U.S. We think you probably will get lower exports. Now there's a lot of unknowns in terms of how much disruption there's going to be. I think last week was the first week that they extended the holiday for a lot of the provinces on the East Coast that make up a big portion of their manufacturing and trade in China. So I think we're just trying to watch and see how long do those business holidays last to try to get an idea for the potential repercussions for the U.S.
Is there any sense, this is a global GDP issue, arguably, given that, as you mentioned, how big China is in terms of manufacturing, exports, as well as imports. You think about, Europe as well. It's always been an issue. Have you guys thought about, I'm sure you're running your models, thinking about maybe some of the sensitivities around there, but is it still too early at this point?
Well, again, I think there's a lot of unknowns in terms of what, how the virus will progress, and as a result, how much business disruption that will get. So we're trying to just kind of watch and monitor that. Right. But you're right that China imports a lot of commodity prices. Right. So this is a demand issue on that side, but then they export a lot of manufactured goods. So that's a supply shock as well.
Yep. Here's a PIMCO question, Tiffany, for you. What's the malleability, the flexibility of our West Coast system? Folks, PIMCO.
All the ports
the Pacific Investment Management Company.
Yep.
Thank you. PIMCO on the West Coast, what's the malleability of the West Coast to adapt on a shipping basis? Is that an unfair question here?
So we certainly see bottlenecks that can happen. If you have shipping, we've already seen, I think, shipping that has started to. There's weekly data that suggests that it's already starting to decline, at least out of China. So I think maybe the question is more about, when things start to reopen, when commerce, starts to normalize, how much of the bottlenecks. I think that's more of the issue in terms of the ports. It's not about, the reduction in capacity. It's when the stuff needs to come in, what are the bottlenecks and how long does it take to get in? Because that can certainly be disruptive as well to U.S. growth. It can cause, that growth rebound that you can get after these things normalize to take longer.
So, Tiffany, today is Jobs Day. We had some good numbers, very good number. What is your takeaway of kind of the U.S. consumer, the job market? Is the consumer strong enough to continue to push this economy forward?
Yeah, I mean, I think, obviously there was some, the weather has been fantastic this year, unseasonably warm, so that obviously helped.
It's always good in Newport Beach. I mean, let's be honest. Come on.
It's been a little chilly in Newport Beach, actually.
Really? Oh,
yeah.
How do you define chilly?
40s.
Okay.
But no, the construction sector obviously benefited from that. But in addition, though, I think this report was actually really good news for the Fed on a lot of angles, because the residential construction has actually been quite good, and it's benefiting from lower interest rates. In other aspects of this report, it was a strong report. You're having strong participation. It's everything I think the Fed probably wanted.
It's a Friday. Everybody knows we go into our weekend and our weekend reading, and then we go to Monday and we stagger to the middle of March in the Fed meeting. I'm looking at it down, negative 200. Okay, the equity market's noise, I get that. A 158 10-year in 6 basis points this morning. I've got dollar stronger with a 98.60 DXY. The jumble here that you see, is it the market's anticipating 1 or 2 rate cuts, or is the market's really almost clueless about what the Fed's going to do? Which is it?
Well, I mean, I think that obviously there's a lot of uncertainty about the global impact of the coronavirus. Markets price in myriad risks. But as well, inflation has continued to run underneath the Fed's target, and wage pressures today were they were okay. I mean, still 3% is not I wouldn't call it building wage pressures. So I think we're having the strategy review. The Fed is having a strategy review, and I think within that review, they're trying to figure out do we want I think they want to allow some above target inflation if it were to occur, but I think the discussion maybe is also one around, do they want to be a little bit more aggressive than that and actually target inflation back to 2% by lowering rates. And we don't think that they're going to be that aggressive, because they might have to take on some financial stability risks. You could also have nonlinearities in the Phillips curve that you don't really understand as you're pushing the unemployment rate even lower. But I think that's what the market's kind of grappling with. And overall, we would kind of sum it up to say that the probability or the likelihood the Fed cuts is probably higher than hikes, and they're going to be super sensitive to any prolonged growth slowdown.
Are you surprised, Tiffany, that given where we are at or near full employment, continuing to add jobs at a healthy pace, that we're not seeing more wage pressure upward?
So I think maybe several years ago we all would have been surprised, but I think now, I think maybe the picture is becoming a little bit more clear. We've seen participation that's increased, along with the unemployment rate falling, and that's really a good thing. It's been prime age females for quite a while. We still think maybe there's some slack in the labor market on the prime age male side. I think that actually even improved a little bit today. So all of that is good news that, it seems like the labor market is expanding in terms of supply to meet labor market demand, and that should give the Fed a little bit extra room. So in that kind of world, we aren't necessarily surprised that wage inflation isn't running higher.
Prime age male, I think that's not you and I, Tom. I'm just going to suggest
no,
that.
That's CFA talk.
Yeah, exactly. So Tiffany, I mean, at what point should we be concerned about manufacturing weakness, business investment, business investment? Just it's just not there. And I'm not sure if that's from the leftover from the China trade uncertainty, from the coronavirus, or just maybe it's just the normal cycle. When does that become an issue for economists? Kind of worry as opposed to the strong consumer?
Yeah. No, I mean, that's a great question. And the thing that we've been emphasizing is that the U.S. lags the rest of the world. So before the coronavirus issues, we had been seeing early indicators of some stabilization in global industrial production growth. China really leads that. And I think there was some indication of some stabilization in Chinese growth, at least on our measures. So the U.S. lags that. So we expected and have expected some continued deceleration and weakness in U.S. investment and manufacturing, but ultimately it should rebound, and we still expect that.
I want to go back to malleability and elasticities. This is a huge shock, and I understand there's massive uncertainty over China. The fact is, sitting in your chair yesterday, Tiffany Welding, was Jeffrey Curry of Goldman Sachs, and they're a cautious house, I would say, folks, the fabric of Goldman Sachs, back 30, 40 years. They've gone all PIMCO in the last 48 hours or whatever. They're looking at China 4.0% China GDP. Do you have any understanding of how that exogenous shock redounds on the U.S. economy for Chairman Powell? Or can he actually stay separate from it? I don't buy for a second he can stay separate from a Pacific Rim collapse.
Yeah, I mean, again, I think it's how long the disruption in China lasts. I think if it lasts a couple of weeks, if it's just 2 points on their first quarter GDP report, and then you have business and activity that's bouncing back, I think that's okay. The Fed probably looks through that, but they are trying to understand, because monetary policy works with a lag. They're trying to understand, if we hike or if we cut interest rates today, that's going to have an impact, 6 months from now. So is this really going to be weakness 6 months from now, or 6 months from now, are we going to be okay?
How can we cut rates with a 3-month moving average of job formation of 209,000, a 12-month trailing 174,000 moving average, when everybody demographically like you is saying we're a 120,000 economy? I get where rates are, but what's the rationale to cut rates with that kind of unit job formation?
Well, you want jobs to stay strong, and we're seeing that labor supply improvement. The longer the economy goes without a recession, just the more what economists call the supply side benefits are, and that's good news ultimately. At some point, if the economy continues, we would hope that those labor supply gains will turn into increased capital deepening. We're seeing some technology related investments.
Are we seeing labor deepening?
Yeah, we are. So the participation
we're seeing an increasing
rate,
labor share.
Labor share has maybe increased a little bit.
Let's parse that. Labor participation, I think our audience understands the number of bodies in the labor force, et cetera. What's labor share, and is it really there?
Yeah.
Like that poetry there? I only do that.
Absolutely.
Tiffany, I only do that on Friday.
It's pretty impressive, yeah. So labor share is just the part of the total aggregate income that labor takes versus shareholders or the capital owners. And what we've seen over the last 20 or 30 years, maybe longer than that, is that there's been a steady decline in labor share, and that's the result of lower labor bargaining power, trends toward deunionization in the U.S. and other things. So you tend to, when the economy starts to run hot, or I wouldn't say that we're running hot now, but when it's in good times and you have people start to come back, you are able to get wage pressures, and that labor share should go up. We're not seeing that though as much.
Tiffany Wilding, thank you so much for joining us. Oh, there we go. Tiffany Wilding, that's Blue Button.
Paul's first day.
Tiffany Wilding, Bloomberg, in our Bloomberg Interactive Broker studio. Tiffany is a PIMCO U.S. economist. Thanks for coming in and joining us, giving us your thoughts on the jobs number and all things economics. Let's get world and national headlines right now with Michael Barr. Michael.
Thank you very much, Paul and Tom. The top 7 Democratic presidential candidates are set to face off on the debate stage in New Hampshire. Bloomberg will carry it live starting at 8 p.m. Wall Street time, followed by a special edition of Bloomberg's Sound On with Kevin Cirilli. Meanwhile, Pete Buttigieg is catching Bernie Sanders in New Hampshire. According to a Boston Globe, WBZ-TV, Suffolk University poll, Sanders has 24%, while Buttigieg is a close second with 23%. Former GOP Congressman Joel Walsh is ending his bid. According to the Republican presidential nominee, he was speaking to CNN this morning. He says that he rejects the notion that President Trump is a true conservative.
Look, I think the Republican Party is a cult. I think it's breaking up. I think there's an opening for decent, honorable conservatives outside of the Donald Trump Party.
The former Tea Party member says he'd accept anyone over Trump, whom he sees as an existential threat to the Constitution and the country. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom Paul?
Michael Barr, thanks so much. It's Jobs Day. We're picking up the pieces off of that. We do it with a Dow negative 173 as well. Let's talk about the jobs. It's a gig economy. You, I think, Paul, brought it up with Mandeep, the idea of California battling about this. I mean, to me, this comes down to when the economists like Tiffany Wild say to me, wow, everything's good, we're seeing all this low-wage employment. Are we seeing low-wage employment because we're generating jobs at low-wage employment? Or what partial differential of low-wage employment used to be middle-wage employment and is now low-wage employment?
Yeah, it's interesting. I think, we talk to the economists like Tiffany, like the Carl Ricciardonas of the world, and we talk about jobs numbers every month, and we kind of say, geez, we're at or near full employment. Shouldn't we be having higher wage growth other than 3%? And the response we get oftentimes, Tom, is that, a lot of it is just the jobs that that are being created in this economy right here are somewhat on the lower end of the wage scale, so you're not necessarily seeing the wage inflation.
If we could get fancy, we interview Luke Howe and other people. Could you imagine like interviewing like 3 Uber drivers back to back, randomly selected, and ask them about, the buoyancy of the low wage economy?
Yeah,
they're going to say you're nuts.
You're nuts because they're going to say we're working hard and we're not making what we need to be making.
I have great respect for this, and I think of Dr. Glassman, who joined us earlier, John Sylvia, the legend for Wells Fargo, with his commitment to the National Association for Business Economics, someone in academics like Ed Lazier out of Stanford, and I just think the economic textbook issues are too pat.
Yes.
And the answer is there's more going on here, and to me, it's a below middle decile group that's being crammed down to a lower wage economy.
I tell you, here's my man on the street analysis. You walk into any Starbucks anywhere in the country or the world for that matter, and you look around at the 30 or 40 people there that have their laptops open, and you're like, A, what are they doing? These are prime working age people. A, what are they doing, and how are they contributing to the economy? I don't know. And how do we capture that? I don't know.
What's incredible, that's the first place I met Luke Howe. He was writing a hockey blog for the Toronto Maple Leafs off of Starbucks at desk as well. I mean, look, help us out here. Go away from markets and help us with economics right now. What you see in your cohort, when you see in your cohort, are people telling us they're gainfully employed and wages are great?
I would say no for the most part, but I always think there's going to be a kind of keeping up with the Joneses dynamic where we're always, no matter how good things are, we'll never think it's that great. But the real answer to the question that I think you guys have been asking is just we're just not anywhere near full employment. Like you get beaten over the head with it month over month over month. The high amount of flows that are going straight from the not in labor force category, so people we don't count as part of Slack, people we don't count as the part of the available pool of labor, that go from 1 month not looking for a job to in employment the next month. It's been vast, it's been amazing, and it's been swelling for a number of years, far beyond what anyone could have thought. There's just much more out there in terms of job growth than you would have thought. And if you look at in particular the 35 to 44-year-old male cohort, which my colleague Matt Bosler flagged, like it's at near recessionary levels in previous cycles. There's been a lot of cyclical improvement, but there's a lot of room for improvement to go from here, from these levels.
So should we not be looking necessarily at that unemployment rate, the 3.6% headline number? Is that not really indicative of at or near full employment?
Yeah, I would say definitely not. And for a while, it has not been telling a story, and you won't get the kind of wage growth that probably a lot of people are hoping for, would like to see until you really start to see employment to population ratios really pick up more meaningfully. And hey, there is good news on that front. The EPOP for 25 to 54 year prime age workers is now at its highest level since 2001.
Come on, get with it, Paul.
I know, that's a new one for me. I gotta hang out.
Paul's he's more about K-pop.
I want to, with the market here, negative 191 and yields where they are. What's the correlation right now of bond yields to equities? As Lisa mentioned brilliantly today, it was correlation off, then it was correlation on, and now we're sort of off again. What is it actually when you look at the math?
Well, yeah, so for a while, we had the period where stocks were able to rally while bond yields were falling, and that kind of odd, but happened for a while. And now for quite a bit since mid-January, we've been back in a period where that correlation has flipped, and you need higher yields, you need kind of good news about the perception of the virus or the state of the domestic economy for U.S. stocks to be able to rally, and you see that on full display. You saw it whether you look at the 10-year, whether you looked at December 2020 euro dollars and stocks, and that kind of reaction in the aftermath of the jobs print.
So we had an inverted yield curve there recently. Any concern there, or is that just kind of a technical thing? You're not worrying? It was short-lived, certainly. Any reason investors should be concerned about that?
I very actively do not care about the 3-month, 10-year inversion
That's what I have on my screen.
as an indicator of the forward outlook. And like, just because everyone wants to say, oh, it's a recession signal, it's a recession signal. If you look back through history, the one time we have to point to a bull flattening into inversion was 1998, and there was no recession. So even if you want to like use the small sample size, it's working against you here.
I want to talk about a cultural imperative, and Paul, the puck has dropped this Saturday.
The Leafs?
This is Leafs at Montreal.
I thought it was Duke at North Carolina. No?
Same idea.
Okay.
Same idea. I mean, Luke, explain to our global audience and our American audience the absolute magic of Montreal at Toronto or Toronto at Montreal. There's a fabric there, isn't there, that just goes way back.
It really is. I'm trying to think of comparables, but like maybe for people like your Bills, Patriots,
but
or maybe your
Yankees Red Sox isn't some would say there's a language difference.
Yeah, but for me, it's just going to be a really, really rough weekend because Montreal has just a great chance to probably play spoiler and try and ruin Toronto's season. And, back-to-back games, Toronto plays Anaheim tonight. So it'll be I don't think Montreal plays tonight, so it'll be a rested Habs team hungry for the Maple Leafs, and that's just, I feel like I'm going to not have a fun Saturday night.
I want to bring this up just to make your weekend miserable as well. Of course, we will see.
Is there a Maple Leafs bar that you go to here in New York?
The bottle next to my coffee table is the bar I go to watch Leafs game for.
Very good. Next time we'll go. Luke Kawa, thank you so much for joining us here. Just brilliant on the markets early in the morning, and of course the market negative 158 on the Dow. The VIX 15.67. I'm going to call it all in all a churn this week. Let me look at the bond market right now. Bills, notes, and bonds 142 on the 2-year note, 10-year note 159, and that 30-year bond with that 200 mark out at 2.05. That's in a solid 6 basis points. It is an odd market. We're watching West Texas Intermediate. That's friendly for the President of the United States, 50.34. You may get a 49 print on that. There's a little bit of fragility to that bid. Gold advances $7 today, but 15.76. Jeff Curry with us at Goldman Sachs yesterday, really reiterating strongly the Goldman Sachs call of a stronger gold price as well. It is always an important interview. It started out, sort of a little fractious, but it's really quite something to see our John Farrell with the National Economic Director, Lawrence Kudlow. Here is John Farrell.
For the White House's view on the jobs report now, I'm really pleased to say we're joined on Bloomberg Television and on Bloomberg Radio by Larry Kudlow, National Economic Council Director. Larry, great to see you. Great week for the administration as well. Stellar job numbers. Big debate around this table on Bloomberg TV and on Bloomberg Radio as to whether we have found full employment yet in the United States of America. What's your take, Larry?
Yeah, it's a good point. Look, I'm focusing on the employment to population ratio, which a lot of labor economists, Ed Lazier and others say is the best measure. When you look at that, Jonathan, we went up 0.2% in today's report for January. So, A, that's good. But, B, we're at 61.2%. The peak back in 2006 was over 63%. What that means in terms of our growing population is that there could be as many as 6 million workers who are still out there that may have dropped out of the labor force. We've had labor force increase of 3.5 million. Prior administration lost jobs. But the point is, people see the better job opportunities. They see retraining and reskilling opportunities. They're coming out of the woodwork. And the employment ratio suggests if we keep marching up towards the prior peak, as I believe they will, and today's blowout number suggests, you could have as many as 6 million more workers in this country ready to come back to work and join the labor rolls.
So, Larry, this is not necessarily a bad thing. I'm just wondering, just in terms of your assessment, do you think the administration and many other people on Wall Street as well have underestimated the amount of work still left to do to get back to that peak?
The amount of workers, you mean, Jonathan?
Yeah, to get